T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery.
And one thing that I've come to believe is that technology can bring greater access to our capital markets. Our central question is this, though. When new technologies come along and change the face of finance, as they have done for decades, how do we continue to achieve our core public policy goals? In my role, I will always be animated by thinking about working families in the SEC's three-part mission: protecting investors, promoting fair, orderly, and efficient markets, facilitating capital formation.
Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, 5, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now and
Dan, you sound good.
Discovery Houston, negative return.
Copy, a negative return.
When you were before, couldn't look you in the eye. You're just like an angel. Your skin makes me cry. You float like a feather in a beautiful world. I wish I was special. You're so fucking special. But I'm a creep. I'm a widow. What the hell am I doing here? I don't belong here. I don't care for her. I wanna have control. I want a perfect body. soul. I want you to notice when I'm not around. So fucking special. I wish I was special, but I'm a creep. I'm a widow. What the hell am I doing here? I don't belong here. Whatever makes you happy, whatever you want. You're so fucking special. I wish I was special, but I'm a creep. I'm a widow. What the hell am I doing here? I don't belong here. I don't belong here.
Good morning to AMC and ADD, where we buy, we hold, and we screw the hedgy. No, we don't feel that way about you. Good old Gazerbeam Gary, we don't feel that way about you. You're not a creep. Stop it. You need to stop getting down on yourself, buddy. I understand. Yeah, you can come out. It's okay. We understand it's a tough job. It is a tough job, and you guys have a lot to say about what's going on here. And crazy. We had an excellent earnings report. I sat there and I listened through it, and I talked to Ezreal was on the space call yesterday, and Crazy Pepe was on the space call with me, and I was texting back and forth with a couple people at the time. Honestly, I gotta be honest with you guys. I was a little shaky. I was a little shaky when I started hearing Adam Aaron saying the words that were coming out of my mouth to you guys on this channel. I reached out to Adam and sent the message on Twitter, like about the whole Cracker Jack thing, and to hear that stuff come out of his mouth, I don't know. It was one of those moments where you just kind of go like, "Holy crap, somebody's listening." But you better not start calling me. I don't mind the Al Borland. I don't mind the Santa Claus. I don't mind any other stuff. But you guys start calling me the Cracker Jack guy, and I'm a bit pissed. You better not start calling me the Cracker Jack guy. Anyways, what a night. What a night. So let's look what happened here. Bondar has a really interesting point. Price closes, like, I mean, they pretty much just run us flat for like the last hour, pretty much. Was this part? I guess it's a little bit of a rundown and then flat. And market closes. We start seeing this thing spiking as soon as the earnings report comes in. Like as soon as they start talking. Actually, no. I guess it was a little bit before, wasn't it? 20 minutes. I guess it was only 20 minutes after market, so it was probably later on during the earnings report. It felt like it was right when it happened. So price has this like nice run up to 47.50, and we're all sitting there going like, "Oh crap, this is happening, and then next thing we know, this thing just starts tanking off on us, and as if people are, selling shares or something in the aftermarket, like it's dying. And it's just more market manipulation. So market opens up this morning. Let's see, where is it at? Right here? Yeah, right here. Market opens this morning, heads up a little bit, heads north, heads south, ends up settling pretty much even from where we opened up the market at, almost on the pre-market hours. But overall, as it stands right now, we're down 4.97% in the after hours in all. From yesterday's closing of 45.06, we're now at 42.82. We are in the gray zone again, 40 to 45. So, questions are rolling in. What price do I think the market will open? I have no clue. I have no clue. I mean, so the first thing that I noticed, obviously, is that volume's up. Right, that's the first thing that I saw. I actually, oh boy, guys, it's been a rough night for me. I woke up some odd hours and slept some crazy hours. It's not good. It was definitely not good for me. Oh, I forgot my camera. So I was up when pre-market opened this morning, and kind of watched like the first few minutes of volume, and I was pretty stoked. I was like, yeah, this is pretty good. It kind of died off a little bit, but we've had some spikes, as you can see, along the way. But I guess what I want to say is that overall, our volume is up compared to where we've been. Now, let's take a look at Suck, Squeeze, Bang, Blow just really quickly so I can fill in my paperwork. I'm going to blind you in 3, 2, 1. All right, I think I fit it in there just nicely. Market Watch released something right after earnings. Okay, I'll check it out. All right, what did we close at? We closed at 45.06. Somebody put that. I put 45 in here as a hypothetical. We ended up closing at 45.06. Our volume ended up being much larger than I had thought for the volume. By closing, it wasn't, but after the aftermarket hours had finished, volume ended up being quite a bit heavier. We actually did better than my projection of 65, and we ended up doing 69,788, 500. Nice. Which ended up being a 75% increase. I don't think I want to call this the blow. A 75% increase is not enough, in my opinion, of volume to consider this the blow. However, the price is enough. And it's actually, quite frankly, on the other side of being too far out of that range. You know, I kept talking about how price needs to, in the bang phase, price needs to remain relatively the same. And relatively going into the bang was $40 flat. We went down to $34.76. We went up to $45.06. That's kind of far-reaching on both sides of relative. So I would suggest there's a strong possibility with pre-market volume the way that it is right now that today could be the first day of the blow. It could be. But I'm just the crackerjack guy here, so who knows? We'll keep watching it. Oh, wait. I got to update one more thing here. Previous day's volumes always changes a little bit from day to day. Let's see, 3,994, 940. 600. Okay, it actually didn't change. Okay, no changes needed to be made. Market Watch released an article right after the earnings. All right, so let me check that out real quick before I move into the other stuff. Close. Hopefully it's up here. If you don't have a link to it, I mean, I can go to Market Watch. And just see what they have to say. Twelve hours ago would be about right. Are you talking about the AMC beats earnings expectations but warns that the virus continues to be with us? Let me just go straight to Market Watch. let's see. The only thing I'm seeing here is yeah, I'm not seeing specifically probably what it is that you're talking about, but if you do crazy, I can make you a moderator and for a short period of time and let you link it if you want. If you want to link it, crazy, I just made you a moderator, so you can link that in there if you want to. But let's go ahead and do the technical analysis for the morning. Let's say goodbye to good old Gazer Beam Gary. We don't need him to see any more of this manipulation. And I'm going to log into a couple pages here real quickly before I do. But I'll put you guys on the other page. Oh, I'm still tired. Okay. All right, let's take a look at everything here. Starting from the top side here. Who got points? Who got points yesterday? 45 bucks. The only person who didn't get a point would be Adam. My prediction was 43.5 to 46.5. Eric was 44 to 47, and Duncan was 43 to 46. Monty got a point. Throwing that out there just in case. He was 45 to 48. He got it by 6 cents. Adam said 50 to 53. He actually said 50 to 100. He said today was the day. It didn't end up being the day, but he was definitely right about it being explosive, if that's what he meant. So let's see. So we got to give points to everybody but Adam. Cracker Jacks. I couldn't believe it. I was making dinner when I was listening to that, and I had to sit down almost. I was like, man, I can't believe he's saying that. Short exempt volume. Where are we at here? I'm gonna refresh Stonko Tracker. Short exempt volume. Obviously, since volume was up, it went up. So it was 304.5 thousand shares in volume. So I will update True Demons data. 304.5. Utilization 85.77, which is down almost a full point. And day over day price increase was 8.06. Now, with the price increase that we had last Friday of 4.12 and the price increase of 8.06 that we had yesterday, we're 2 of 3. I'm going to go ahead and count it 2 of 3. And I'm going to change this to yellow. Uh-oh. There we go. So we've got one of our indicators flagging yellow. And let's take a look at off exchange amount. Off exchange finished at 58.09. That was down from the 61% that it was at. So they managed to knock down the off exchange amount in volume, but that was probably due to the volume spiking a little bit. They didn't try to stuff it away into OTC. Moving down the page some further, the total amount borrowed changed. Let me pull that up because I don't have, I got to pull that up every single day. So let me pull that up real quickly here. Off exchange. The final number that it came to was negative 1.35 for returned shares yesterday. The last number that I had recorded is 1.21. So obviously that's going to lower. That's going to lower the estimated short share interest of the free float to 16.55. Taking a look at the top right-hand corner, institutional share ownership. 142.7 is jumping up to 142.88. Max pain. That has to be at least 40. That's got to be at least 40. I'm guessing 41, but it's got to be at least 40. I'm going to go with 41. Let's see. Yep, it's 40. Max pain for the day is set to 40. And last but not least, let's update these call options. Option chain. I'm going to scroll down to the bottom to the $85 strike price, and we're going to just check it out really quickly and see how many they got down there, just because I like to kind of see what the lottery ticket winners are going for. At a $85 strike price, the open interest yesterday was 4.1 thousand. It's increased to 17.8 today. 17.8 thousand contracts. Scrolling back up, our highest level of open interest is right there, and there's our highest on the put. So if I scroll this right there, hopefully you guys can see it all. Let's see, you cannot. All right, I'll put the calls on the page first so you can see them. And let's see, at a $50 strike price, which is what it was yesterday, at 13.9 thousand contracts, it has increased to 21.1. And on the put side of things, scrolling the page back up, the highest level of open interest on the puts is at a $30 strike price, which is $10 less than what it was yesterday. So let me re-verify that data. That is correct. Nope. That is definitely correct. Oh, no, wait. I'm sorry. Oh, man. Not getting good sleep is not going to be good for me. It was 30 yesterday. 18.3 thousand contracts is what they had open yesterday. It's now 18.9, so ever so slightly higher. All right, let's take you guys over to some of the other pages. And let's take a look at why things are happening the way that they're happening. First things first. Ortex. On loan amount slightly went down from, let's see, 103.6 to 102.7, so almost a million shares. And then the on loan average age per day increased from 77.27 to 78.17. So those numbers started to separate away from each other, which is not what I like to see, but hopefully we'll start seeing those start pinching back in towards each other here. But why did utilization go down? Let's check it out. Pulling over my cheat sheet. And my trusty handy dandy calculator. 102.77 divided by our, so total amount of shares on loan divided by our utilization. Oops. 119.8. The total amount of shares that were available to loan yesterday was 119.7. Today it's 119.8. So it actually increased. That number increased, and seeing this number increase is a good thing. The closer that gets to 155 million, the closer we are to seeing massive increases in prices. It doesn't have to get all the way up there, but the closer it does get, the more likely is that we'll start seeing big increases. So then I take this number now and I subtract the amount of shares that are actually on loan. And it tells me how many shares that are available to loan as of yesterday. So I'm going to transfer this data over here. That's Monday's data. And today's data is up. More shares to loan means less utilization. That's why our utilization went down. Yesterday we witnessed them borrow 3.4 million shares. Throughout the night they were busy bodies. They were busy bodies. I didn't check it. Excuse me. Last night I didn't check it when I should have. So I'm going to be a little lacking in data for you here. Oh, I'm going to blind you too. But we'll check Stonko Tracker here in just a second. I have data from at least midnight, so we'll check that out. Orders by Fidelity customers, AMC currently 5th with a 49% buy to 51% sell ratio. GME in 27th position with a 40% buy and a 60% sell ratio. All right, this is kind of cool because we haven't seen numbers this low in quite a while. But what I want you to notice is that they've borrowed about 300,000 shares here, at 1.5 down to 1.2, and then they started returning them. So we got, where's my calculator? There she is. So we got 0.2 right there. But this right here, 5.9 down to 3.8. Well, that's 2.1. Then it increased back up to the 5.7, and then we had another 700,000 right there, so another 0.7. So we're already at 3 million. We're at 3 million shares having been borrowed this morning. So they're definitely actively buying, or borrowing, I should say. 3 million shares borrowed. Yesterday they borrowed, we witnessed 3.4. Changing my notes real quick over here on the side. I need to be better about monitoring this just before I go to bed and taking a screenshot. I'm lacking. 55.9 thousand contracts in the money on the calls, 71,000 contracts out of the money on the puts, and only 67.9 thousand contracts out of the money on the calls. That's pretty good. Those are really good numbers. I like what I'm seeing there. And of course, short exempt volume, short percentage, and dark pools not being reported. I don't know what's going on here. I really don't. FTSE China was down 0.548 yesterday, and the Shenzhen was up 0.43. In the pre-market, Robinhood is down 3.5. Bondaro making a point that they had a data breach and the price went up. Maybe it was a good thing that they had a data breach. Well, remember they had all of our Say Technology information. How convenient for them to have a data breach. Amazon up 0.44. Cinemark up 0.24 in the pre-market. Doge down 2.12. GameStop up 1.16 in the pre-market, and we are down just underneath 5%. Yesterday's inflow versus outflow, we had more of an inflow. Almost 30 points. 29 points between inflow and outflow. Total volume right now at 93,000 shares. We still have another 30 minutes. We'll break 100 easy. We'll break 100 easy, and I would suggest... I'm gonna have to do some research to figure out what I'm gonna guess for volume for the day today. I'm gonna have to do some research. Looking at our intervals though, let's see where we're at here. Pretty equal buying and selling pressure on a 1 hour interval with RSI right down the middle at 50.25. On a 30-minute interval, there's more buying pressure than selling pressure. And it looks like there's going to be a convergence here of the two of the vortex indicator with an RSI at 46.11. And on a 5-minute interval, we definitely have more buying pressure than selling pressure, and it looks like it's going to cross over here in the next 5 minutes with an RSI of 47.45. So, what does this information tell me right here? So with these three intervals, we look primed to be able to shoot up in price here. We look absolutely primed to be able to shoot up through price and possibly punch through that next level, that next gray level of 49 to 54. I know that our price is a little low right now, but if we have continued volume increasing throughout the day and price shooting up, we might be able to punch through that $49 to $54 range, that gray zone, and pretty easily, especially with RSI cooled off. So it's actually kind of a blessing in disguise that we've had this much downwards movement in the aftermarket hours. Blessing in disguise. Let's see. Crazy Pepe with the Market Watch article. What does it say? Meme stocks like GameStop, AMC pose risk to financial stability, the Fed says. Yes, I did see that. I saw that. Yeah, we've been saying this for a long time now. They're going to look for scapegoats, right? The whole Spider-Man meme thing where everybody starts pointing fingers at everybody else. It's not my fault. It's not my fault. You can almost guarantee that there's going to be finger pointing when the market starts crashing due to this. This is the let's protect ourselves now. Yesterday, Bradley, I'm looking at what you're writing here. Good morning, Salty Dog. Bradley, so yesterday it was reported by user of Intellect on Twitter that the IEX was out of shares. As to whether or not that's that's exactly what happened. That's what was being reported. There was multiple instances of people calling brokers and they were had their orders canceled, and were reporting the same information. If that's the case, I mean, the job of the market makers is to create liquidity, and if they're not creating liquidity, my presumption would be is that they've ran out of shares that they can borrow. But we just looked at the numbers. The numbers say that they have plenty of shares to borrow. If I pull this back over here, they have 17, according to Ortex, they have 17 million shares to borrow today. Yesterday they had 16 million. And they only borrowed 3.4 million yesterday. So they had plenty of shares to borrow to create liquidity. So the only thing that would have maybe perhaps been causing them to not be able to create liquidity, maybe due to new rules and regulations, and the fact that we weren't in that SSR had not been triggered. Because if SSR is triggered, there are SEC regulations that allow them to create synthetic shorts to create liquidity in the market. So it could be some of the tightening of the rules that, maybe that's why that occurred. But if it's true, it's pretty good information. It's good. It looks good for us. It looks good for us. So let me take a look at MarketWatch, or not MarketWatch, TradingView. I need to look at TradingView real quick here, and I need to pull up pre-market indicators and start taking a look at volume profiles, because I kind of want to see what kind of pace we're on here in contrast to some other days in the past. So if I had to liken today to some other point in the past, it would probably be maybe the 23rd, no, the 22nd of last month. 22nd or the 21st. So let me look at those 2 days real quick for volume. 33 and 36, or 46. Well, let's see what our 7 a.m. pokey stick of volume turns out to be, because that's really going to be what kind of, for me, kind of determines what it is that I think I'm seeing. So, what'd you guys think of the meeting overall? The earnings report. I thought it was pretty good. I mean, there's a lot of stuff in there that really made me go like, yes, yeah. I kept going like fist pumping. Let me pull up AMC's page for news and see what's going on here. Most of the news is talking about Shiba Inu crypto payments. 2 articles in the last couple hours. That's it. And they both talk about Shiba Inu. Is Evergrande off our radar? Have we stopped talking about that? 1 hour ago, Fed warns China's property problems could hurt global markets and the U.S. economy. Remember I was just saying about the whole Spider-Man meme, pointing fingers at everything? It's not us. It's not us. We didn't do this. We didn't cause this. It's everybody else but us. The Fed warns China's property problems could hurt global markets and the U.S. economy. That's CNN. CNN reporting that an hour ago. 4 hours ago, by Business Insider, China's Evergrande debt woes could spill over to the U.S., the Fed says. Interesting. Salty Dog saying the meeting was great. There wasn't any bad information. Ivan saying boring on the $42 start for the day today. Yinxing, let me take a look at something real quick here. I don't remember what I had said yesterday. I know I had mentioned to you guys that we had, a little bit of a what appeared to be a head and shoulder pattern forming, and then it just kind of traded sideways and didn't really ever break out going down. And then it wasn't until the aftermarket hours that we did break out down. I think I drew the line across at 42.67 as being the point at where I thought we might see support on a return. 42.67 kind of seems like the right price to me. So I would suggest 42.67 is probably about where we start the morning off. Or somewhere thereabouts. And I have no idea why I don't have any Fibonacci things going on here. Okay, I got one. It's not in this price range. This is the trend line for the cup and handle. We're supposed to hit $49 and some change, $49.70. We were doing really nicely on the edge of that handle until aftermarket hours. My suggestion is that we probably spike up pretty hard to get ourselves back onto that line. That would be my guess. But I do need to record this data because that is a new high, and the way I track this data, I have to track highs and lows. So 47.50 is a 40.1% increase in price from 33.90 that we were at several days ago. In fact, how long ago was it that we were at 33.90? It was way back here in the aftermarket hours, aftermarket hours, pre-market hours of the 25th. So we've been on a run ever since. 47.50. It's a 40.1% increase in price. Synthetic price failures usually start at around 19.5%. So let's see, 30. Somewhere around like 38.25. Yeah, so if this were to drop, I need to move these numbers here just a tad bit. My synthetic price failure numbers here. So if we were to drop, the beginning of that would be at 38.25. This would be the lowest we would probably see without paper hands. Well, that's going to be impossible. The paper hand number would be $37.31. So it's good. We're raising the bottom. How far we can go down is being raised, and that's good. That's a good thing for us. So I would suggest that a synthetic price failure could only get down to about $38.25. Synthetic price failure, you're probably going like, what the heck is a synthetic price failure? Salty Dog saying Cloud News Network for CNN. Synthetic price failure. So when I did modeling of GME, a synthetic price failure, I found there was a very common theme that the algorithms use, and it's where they kind of drive the price down about 20%. Now they stair step it down as they go, and they try to let the market do most of the work that it will do for them in dropping the price. But for the most part, when you see the price drop down to about 20%, it should release. It's a point to where it becomes, I guess I would assume, not cost effective to continue to drop the price. So they'll release it at about that 20% range, and then the market can usually start running back up again. Those are usually, like I said, like as the name would imply, they're synthetic price drops. They're not actual like sell-offs of investors. There are probably some investors who are selling during that period of time. But a good way to kind of tell is when, if it's 19.5 to 21.5%, that's synthetic. Anything over 21.5% of a sell-off, then there's probably paper hands involved along the way, and and that's part of the process. There's always going to be people who sell shares on 20% drops. It's just the way that it is. But it's not bad. It's not bad because if it was bad, you would see much bigger drops than that. You would see drops in the 40 to 60% range. That's how you know when us, the retail investors, are really selling shares. When you start seeing 40% dips and 60% dips or anything higher than 21.5%, that's when retail is really selling their shares. And I got all this information from modeling out GME on a minute interval. I pretended like I was living through the entire thing and looked for trends and patterns that were kind of forming in the trading that happened. So then I took that information, I went back and I verified it to VW squeeze and Tesla squeeze and kind of compared the numbers and stuff and saw that those same patterns existed on those squeezes as well. So these algorithms are still trading the same exact way as they always have, and it's been doing the same exact thing on AMC as well. So that's what you need to watch out for, these 20% dips. You just know that they're synthetically manufactured to try and discourage investors from continuing to hold their position. And it works. I mean, think about it. The normal retail investor, a 20% loss is a big loss. But I'm here to tell you that look at where we're at. The buying and holding is working. The buying and holding is working. It has immense power. It's literally the kryptonite to the algorithms because they don't know how to deal with it. The algorithms can't deal with the fact that people just want to hold their shares no matter what. and they can't deal with that. So here's the positive side to this, right? We're at 47.50 right now. A 19 and a half drop in price is 38.25. Knowing that, if we just went from 33.90 to 47.50 and it's a 40% increase, they can only knock us down half the distance of what we've already increased by. So before they would stop, and that should be exciting to you because that means we're winning. Every time that it's like them giving us 2 steps forward and then them taking one step back, right? And every time that they take a step back, they're attempting to draw people out of the stock, and then they let us go 2 steps forward more, and then we take a step back, and 2 steps more, and then sometimes we take 3 or 4 steps, and then they drop us back 2, but they're always dropping us back some. Sorry, let me put it back on the 1 minute interval here. We have 8 more minutes of time before we get to our 7 a.m. pokey stick volume. My 7 a.m. I don't know what time it is for you guys. And it costs them. That's the thing that I think encourages me more than anything. Every time I see the price dropping, those 20% drops, those synthetic price failures, when I see those, that excites me because I know that they're having to work. They're spending a lot of money. They're loaning a lot of shares, and they're working hard to try and drop that price back down because I know that it's costing them something. And that's what really excites me. I actually it was funny. I did the space call last night. I think it was Azrul and I. Azrul got on and we started talking about the price. I don't remember. Let's see. I came on the show. I started the space call, I think, an hour after the earnings report. So let's see. It would have been. Well, I started at 6 o'clock my time, so that would be 1900 on here. Yeah, so it was pretty much like finished. But when I started the call, all this, everything that had happened in the aftermarket hours. And it would have been from 1800. So it would have been like right here. I started the call right here, and price was continuing to drop. And as Rule and I just started laughing. We just started laughing. We thought this was hilarious. Like, I mean, this whole like great earnings report and everything, and then and this price movement here. And I said, like, we're the only people. Good morning, Sean. I'm like, we're the only people who look at our price like this when it drops 5% and just laugh at it. I love that. I think that's hilarious. I think it's absolutely hysterical that we laugh at 5% drops in price. Because I don't think that I can't imagine a time ever in the past 20 some odd years that I've traded stocks, I can't ever remember a time where I laughed at a 5% decrease in value to my overall portfolio. But I did. I almost fell off I wasn't sitting in a chair. I was actually making dinner. Sitting there making dinner and hearing Adam Aaron say everything that I had said about the Cracker Jacks. He basically just referenced the tweet that I had done, and I was like, I almost had to sit down. I told my wife, "Oh my God, Adam Aaron is." I had an earpiece in and listening to it. I'm like, Adam Aaron is talking about the Cracker Jack idea. I can't believe it. This is insane. And then I was like, I think I need to sit down. It is funny. It is funny. I mean, this is ridiculous. It's nonsensical. It's nonsensical to see this. I want to say like 70% of the time that we've had earning reports, even during the pandemic, price has been up on the day of, and I think up to about 2 to 3 days after earnings reports. Historically speaking, we can look at it. Earnings report, 2 days green. Earnings report was red that day, but we had a follow up of 4, 5, 8 days green. Earning report was green, followed by 3, 6, 7 days green. Earnings report, it was red on this one. We had a green day after, 1 red day, and then 4 green days after that. Earnings report green, followed by 3, 6, 7 green days. 7 green days. Here's a bad one. This one's kind of bad looking. This one's got a red day and then a green day and then followed by 3 reds. This one's kind of crappy looking too. I think it was these two here. This is a red, green, and then several reds. But most of this data that I'm pulling up right now is 2019 data, right? That would be expected. So yeah. So what do I think is going to happen today? Yeah, I would hate to guess, Sean. I would hate to guess. I mean, so I'm still going to refer to, the tried and true data that I'm seeing, right? The cup and handle formation should complete to $49.38. If it doesn't, then I would suggest that there's, nefarious shorting shorting going on with the stock. But I would expect to see us to spike back up and get back on track to that reaching $49.70 some odd cents to complete that cup and handle formation. If I pull up market view and I take a look at it, I can throw it up here on the screen. This is the data. I don't remember the exact dates that I had copy and pasted this over from. I think it was like May 15th to like the, I don't know, 20 something rather. I don't remember the exact dates, but the blue that you're going to see here on the screen in a second when Tradingview finally decides to load up for me. There we go. You can see that there's some striking patterns in here that are very similar, but the part that is most similar to me, or that I see, is kind of this downtrend that you see right before we move up into a nice increase in price. So I would suggest that that's more than likely what's going to happen here, but that's just my analysis of it. Don't just take my analysis. I'm sure there's other people out there too as well. For example, this is let me get rid of my information. This is Stockmaster. Stockmaster's got a little bit of a prediction here as to what's going on. He's pointing out the dip here in the aftermarket hours, and he's kind of suggesting a price rip up to, looks like, $59 for the day today, and then it's going to dip back down, and then it's going to retest the 59 according to what he's saying, dip back down again, and then retest to a new higher level above 65. So that's kind of like his little analysis of it. We all have differing opinions, and that's fine. I actually, the more I look at his chart right there, I kind of go like, it's pretty good looking. He's got some good stuff. All right, here's our 7 a.m. pokey stick of volume. This is going to want to, okay, so this is a little bit less than what I would have assumed. Let's see what we got going on here price-wise. Okay, this is way less than I would have anticipated. It's only 58, or sorry, yeah, 58,000 shares. I would have anticipated something much, much larger. Crazy Pepe's going with JP's 53. Let's see here. All right, I gotta guess volume. 156. 156 it's definitely lower than I would have thought. Man, I thought I was gonna be able to call today the blow day, but I mean that the pre-market volume's just not showing. That doesn't mean it can't rip today at some point. What was the volume on November 1st? 34. 34 on the 1st. How about the 22nd? 46. I think I'm gonna 46. Yeah, I'm gonna have to. I hate to say this, but I'm gonna have to guess. I really want to go 40 to 60. Um, I'm gonna do it. I'm gonna go 40 to 60, and I'm just gonna hope that I'm wrong, way wrong, low. The data that I'm pulling right now is actually suggesting that we could actually hit like 35 to 40 million shares traded for the day today. So I'm gonna guess just slightly high to try to capture the top side of this in volume. But I mean, quite honestly, if today's going to be a boom day, then it's going to have to be a lot more volume than just 60. Yes, I would agree with you, Sean. I mean, so here's I mean, to support what Sean is saying right here, let me just throw this back over here real quickly. I want you guys to notice that earlier this morning, the amount of shares that were available to borrow dipped as low as 3.8 million over here in the ETFs. The shares are getting lower and lower and lower. They were up, if you remember, they were up to like 12 a couple days ago, up to 12 million shares in the ETFs. And they're burning through these shares really, really quick. If we can get them to burn through these shares today, we might not see as much of a price increase as we want to see, but it might help in getting rid of. It might help to drive up utilization by getting rid of the amount of shares that are available to borrow, which would be huge. It would be really, really huge for us. It'd be a big win. Thanks, Max. No, I can't. I can only tell you what I think it is. So the pokey stick of volume, it happens every single morning at 7 a.m. my time. It's 8 a.m. Eastern Standard Time. For the most part, generally speaking, it doubles whatever your pre-market morning volume is up to that point. So, for example, if you were to have 100, let's say pre-market volume traded up to that point in time, uh, typically speaking, not always, but typically speaking, you see a doubling. So if it was 100K up to that point, you would end up seeing 200K volume. I have seen several different explanations for the 7 a.m. pokey stick of volume, meaning some people, the biggest or the most popular explanation is that it's positions that are being closed that occurred before or as the market was closing the previous day, and they're finally being settled today. Now, as to whether or not that's true or not, I have no way of knowing. I've looked it up everywhere. I've tried so hard to try and find out that information, and I don't think that there's any solid data that I found. Now, if you find something, please link me to it because, I mean, other than just somebody's word for taking their word for what it is, that's the only thing I've been able to find. But I think that's the most popular opinion is that it's settlements from the previous day that occur when the market opens for settlements today. But what I find to be extremely odd about that is that if it mimics the pre-market volume almost by doubling it almost, today was actually different. Today was much less. Like today we went into it going, the total volume on it today was 60,000. We went into it with about I think just slightly under 100K, and it was only 60,000 in shares. So that's, to me, that's a little bit of an indicator that there might be a possibility that we don't see as big of a push today that we think we might, just because the volume wasn't really high, but that's not a for sure thing. But it does help me to predict volume for the day. And I would tend, as of this point in time right now, I'm going to stick with 40 to 60 million in volume for the day today. No problem, Max. I wish I could help you out more. I mean, quite honestly, I really want to know what it is myself, but I've just coined it as the pokey stick of volume. I have no other rhyme or reason for what to call it. So forgive me for making up terms. But it's catchy, and I think it's really funny too. Every once in a while I'll be on Reddit and I'll see somebody post like, "Did you see this manipulation that happened today?" And I'm like, "Yeah, that happens every single day." But it's fun to kind of see people who are new to the stock get excited about things that they've never seen before, and it's like, well, welcome to the team. Welcome aboard. You get to see the strange things that happen with the stock as you start to monitor it on a daily basis. Yeah, I mean there's really just not anything out there on the internet. I mean there's actually a lot of commentary on it, like verbal commentary on what it is, but you can't find anything that has any legitimacy. It's a very strange event. I just think that it's really strange that pre-market that it would usually mimic pre-market volume so heavily. And that just strikes me as odd. I sometimes wonder if there's foreign trades that would impact our market. If it's possible that maybe that those shares are all traded at once on our exchange in the pre-market hours during that settlement period when it first opens, at the first possible point that it can settle. And so it might be like it might have something to do with foreign trading, right? Because other markets are open overnight. And so it could be a settlement. And it might actually be a settlement of all the shares traded throughout the night in foreign markets. in a price range too, right? Like, I mean, it's showing you a price range of 43 to 42.65. I personally think that it has something to do with um, AMC shares traded, foreign shares traded. That's just my opinion, and that we all have opinions, and you know what that is. Heaping pile of poo. Exactly. I don't know, Max. That's the whole point. Like how, I mean, today it didn't. Today it didn't mimic it at all. I mean, it was off by about 40,000. Well, a little less than 40,000, but um, so here would be my suggestion for my theory. The reason that it mimics the pre-market and aftermarket, or the pre-market data so closely, is because that's the foreign markets being traded, right? All the foreign markets are trading during the pre-market hours. So, maybe there's specific foreign entities that don't trade or don't push their orders through until a specific time, and it might be that 7 a.m., my 7 a.m., 8 a.m. Eastern. Maybe it's once the bank's open or something. I have no idea. I really don't know. But I mean, it's a possibility. It's a good question to ask somebody who, who might know. I kind of, that's like, I've wanted to talk to Mark I can't say his last name, Mark Codes. I've wanted to talk to him on a couple occasions and kind of ask him like some questions that are like burning questions that probably are like well under his level of expertise, and that's actually one of them. I don't know who your bank is, and I don't want you to feel like you have to say, but I can tell you that with like Fidelity, I have Fidelity, and I'm able to trade some of the pre-market, but not all of it. My actual trading doesn't begin until 6 a.m. my time, or 7. It's when I start the show. I start the whole reason that I do the show during the times that I do it is because it's during the trading hours, and I figure if I'm going to be here when I can make a trade, then you'll see it or you'll know about it. So that's why I'm doing the show from 6 a.m. my time until 3 p.m. I should do the show in the after hours because I can trade the after hours too, but that's just too long of a day for me. It's too long of a day. But I will start the show back up if something happens at some point in the future where you'll know it. The show will come back on, and if you're set up for notifications, you'll get it. You'll know. It'll be there. I'm not gonna I'm not gonna miss the opportunity to record the event. Oh, foreign countries not being able to trade in the. But I mean, I would assume that a foreign market's trading during their open market hours, which should be during our normal market hours, or our normal market pre-market hours. So in other words, like, I would assume. Correct me if I'm wrong. Um, I don't. I guess we could ask JP. JP could tell us. Um, Duncan could tell us. I can't remember who else is in foreign countries, but I do have a few foreign country viewers here who could tell me whether or not they can trade AMC during their market open hours. For example, but this is probably a really poor one, is Brazil. Brazil trades AMC in their own market, and but their time zones is the same as ours over here. So gonna try and find you guys some new music today for the break. Man, I've really burned through a lot of music here doing these shows. I'm really having to scroll pretty far down these lists. I think I'm going to start going back over these lists. I don't play some of this. I try to change up the music pretty often so you guys don't have to listen to the same stuff, but I think I'm going to start going back from the top of the list here. I know there's some, you guys had some favorites along the way. Yeah, here's a good one. All right, I'll do this one for today. About 5 more minutes and I'm going to take a break here. What volume? Whoa, what was the volume on the stick on June 2nd? Let's take a look. I'm trying to think what the best way. I probably should use. I'm gonna use I'm gonna use Tradingview to do that because it's gonna be a little bit easier for me to see. However, I can only do 15-minute intervals, which is gonna include an entire 15 minutes worth of data. So you're gonna have to August, June 21st. I'm almost there. And you said June 2nd. Now, just so we're clear, June 2nd's total volume for the day was 766 million shares, which was one of the largest days during that run-up. So taking a look at TradingView and what that 15-minute period was, 28 first, second. Oh, come on, give me a number. $32,000 is what this is saying. It seems awfully low. I don't think I'm looking at the right date here. Because I'm looking at the volume during that day and it doesn't seem. Something's not right. What is not right here? Unfortunately, I can't drive down to it. It's too long ago for me to drive down to it. Oh, it would be so painful. I could do it on Webull, but it's so painful to drive back on a minute interval back that far. It is. I've done it before, and it is really, really painful. Yeah, according to TradingView, it's only saying 32,000, but something's wrong with this data because I'm also looking at the volume level for the day, and the data doesn't look accurate. It doesn't look accurate at all. There's like I got 15 minutes worth of data here where it's only 11,000 or 11 million shares traded for the day. That can't be right. Let me get back to you on that one. I'm gonna research that. I'm gonna see if I can't figure out what it was. Because according to this, yeah, see, there's no way this is right. Like a turning on of their algorithms, like they flip on the switches, kind of the thing. I've wondered that. I mean, Einstein. There's been times where, I've been watching the order book in the aftermarket hours, and it's almost like you can watch them turning off the switches or turning it to like aftermarket hour trading. uh it's almost like a light switch, right? It's almost like you can see it the minute that it happens because the order book clears going into the aftermarket hours, and so you can watch the order book fill back up. Sometimes it fills back up like really, really quickly, and it just keeps on trading super rapid fast. Other times it fills back up really slow, but you can almost like I've seen times where it's like one side doesn't flip on the switch or turn the switch off, and the other side still got like massively filled up, and you'll see like the order book fill up with a bunch of bids, but like hardly any asks or the opposite. I mean, it's kind of interesting to watch the order book in the aftermarket hours. But I mean, I don't know. I don't know if I would. It's possible. Because I feel like there's still a lot of manipulation that happens between 8 a.m. and market open an hour and a half later. Like the trends just don't match up. Like I can pretty much like take some of these if I get rid of the extended hours, I can take a look at the pricing and see the trends so much easier because when you start throwing in extended hours into the model, it just really kind of like throws off everything and makes it look all janky. I don't know. I mean, it's a possibility. I'm not gonna turn down any thoughts. It's definitely a possibility. I mean, I don't know what it is, so it's a possibility. I think probably one of the most fun things for me to do ever since I got order book level 2 was, to watch AMC and how quickly it trades, and then go to like another stock that just has much, much lower volume, and watch the difference, and like it's like watching paint dry, but you can see the transactions happening in a human pace. And it really kind of, if you spend like an hour watching that stuff, you really start to understand more about how the bid and ask works. and it's a dance. It's a dance. There's beauty to it. Beauty for a nerd like me. I'm gonna get you that answer, Einstein. I do want to know what the pre-market volume was for that day. I can almost guarantee you that I was. Ooh, did I start the stream by then? I hadn't started the stream by then. I was thinking maybe I could go. I think I started this stream in July, like the beginning of July, or the end of June. I was gonna say I could just go back to that date and look at it, and we could find out really quick because I do the same thing every single day, or I try to. That's unfortunate that I don't have that data. That would be really interesting to see. According to what I'm pulling up here on TradingView, though, and I don't think this data is accurate at all, because I'm looking at the volume on during that day too, and it doesn't look right. But according to TradingView, it's saying like 33,000 shares in that 15 minutes of 8 o'clock, which I highly doubt's the case. Even if I have to work on this in the after hours to figure out the answer, I'm going to find that out because I want to know myself. As an example, I'm going to pull up today's. Yeah, see, something's not right here. Okay, so here's the deal. I'm looking at TradingView and I'm looking at the exact same timestamp for today, and it's only reporting 219. So I'm not sure what this number is. It says thousands, but if we know that we had 60,000 and it's only reporting here on TradingView that it had 219, something's not right. That's making me question all of TradingView's data now. Let me pull up. I'm gonna pull up another. I'm gonna pull up just volume on here and just another volume. Oh, it's 7:30. It's time for me to go, guys. I totally lost track of time there. All right, guys, I'm gonna take off for break, and I'll come back here in a little bit. I'll be back 15 minutes before market open. See you guys in a bit. So yeah, I just saw Crazy Pepe's note in there about the EU to ban payment for order flow, which I think is really kind of weird. I could have sworn it was already banned, so it's odd to me that that's the case. But yeah, I read Unusual Whales tweet about that as well while I was out on a break. So kind of based off of yesterday's data, I kind of felt that we would see a little bit of support at about $42 and around 60 some odd cents. 42.60, 42.70, and sure enough, we broke past that, and now it's turned into a level of resistance. You can see we've been trading just slightly below it here for most of this pre-market here. Almost looks like a little bit of barcoding going on here. Yeah, not quite, but almost. Just a bunch of doji candles in here. Price prediction for the day today. Let me look at Market Watch or Tradingview. I feel like we're at the bottom. I'm gonna say today might be the. Let me zoom back out here just real quick. I know I'm getting real close here to market open. I feel like we're gonna shoot back up and kind of get back on this path here. Maybe close the day out right about where this line's at right here. So maybe 47, 47.85 ish. So maybe if I just hedge off of 46 and a half. So 45 to 48. My prediction for today. 45 to 48 is my prediction. Volume, I'm really not expecting a whole lot out of volume at this point. I'm saying 40 to 60 million. I mean, we did more than that just yesterday alone. We did 69. Nice. 69 million. JP, what? Yeah, I'm gonna have to stick. I kind of want to 44 to 47 today, Monty. Okay. That's real close to what I've got. Duncan's coming in at 43.2 to 46.2. I've yet to hear from Adam or Eric. I'm just struggling with this one, guys. I'm struggling trying to figure out what's I mean, the pre-market volume doesn't look great. They are borrowing a lot of shares, so if this was if this was a good time to attack the share price, now would be it. It would definitely be now. Well, here's one thing's for sure. Anybody who had $45 call options, hopefully they got out yesterday. Hopefully they got out yesterday. That would be. Hopefully they got out yesterday. Hopefully we can see this return to a price to where they can get out again today. I'd like to think that we'd remain at if we get up to $49, I'd like to think that we could stay there. But I think we'll see a little bit of a price reduction after we do get up that high. Yeah, 47. And I'll tell you why. I mean, I really think that I think that cup and handle formation has to complete. I really do. And I think that what we've seen here is just a bunch of market manipulation and an attempt to try and keep people from potentially buying a lot of options that are going to be out of the money or in the money once it hits. But causing maybe they can exit some of their short positions as well. It's almost like we have a double cup and handle. This is like the biggest cup of folders you've ever seen in your life. It's like you have a bowl and a handle, but inside the handle's another bowl and handle. It's kind of crazy. Which is why I think this price should, move up into that range. I don't know if I've ever seen it do that before. A cup and handle and a cup within a cup and handle. Hooks all week, J hooks all week. Yeah, I mean that's what it looks like. A blow on Thursday. Yeah, we'll see. But it's time for market open. So let me get this show started here with the traditional show start, and I'll see you guys on the other side. I do want to note that we are positive. They are positive on borrowing today. It's 421. I just now noticed that number.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery.
One thing that I've come to believe is that technology can bring greater access to our capital markets. Our central question is this, though. When new technologies come along and change the face of finance, as they have done for decades, how do we continue to achieve our core public policy goals? In my role, I will always be animated by thinking about working families in the SEC's three-part mission: protecting investors, promoting fair, orderly, and efficient markets, facilitating capital formation. I'm pleased.
And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and
liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond. Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now and admin.
Okay, you sound good.
Discovery Houston, negative return.
Copy, negative return.
When you were before, couldn't look you in the eye. You're just like an angel. Your skin makes me cry. You float like a feather in a beautiful world. I wish I was special. You're so fucking special. But I'm a creep. I'm a widow. What the hell am I doing here? I don't belong here. I don't care if it hurts. I wanna have control. I want a perfect body. I want a perfect soul. I want you to notice when I'm not around. You're so fucking special. I wish I was special. But I'm a creep. I'm a widow. What the hell am I doing here? I don't belong here. whatever you want. You're so fucking special. I wish I was special, but I'm a creep. I'm a widow. What the hell am I doing here? I don't belong here. I don't belong here.
Good morning, you filthy apes. Welcome to AMC and ADD, where we buy, we hold, and we screw the hedgy. Doesn't look like it right now. Doesn't look like it right now. But give it a chance. I mean, look at the 6 month numbers. You know, if you want to have any kind of like hopes, look at the 6 month numbers. We're not doing bad. So this is just more attempt to try and drive investors away. So I'm tracking the price now as it stands at 41.12. That's currently 13.4% down from the 47.50. So I'll keep continuing to track this. Now I want to let you guys know, for those of you who weren't here earlier this morning, I went ahead and drew out the synthetic price failures, right? 38.25 would be that 20% drop in price. Sorry, 19.5. And 37.31 would be that 21.5 points. So if we hit the blue line, we can go ahead and consider it a synthetic price failure. I can almost guarantee you that if we don't have paper hands in that point down to that number, then you'll probably see a really hard rebound off of that. Really super hard. If we do have some paper hands in the price range as it drops down to 37.31, then what you would probably see is maybe a couple attempts at trying drawing some paper hands in price here. So we'll continue to watch this and see how this plays out. Volume as it stands right now, we're 3 minutes into it, and volume's pretty kicking. So try not to be discouraged by this, because this is taking a lot of volume to get this price down. So yeah. 4.93, almost 5 million shares in 10 minutes, which is not bad. 250,000 shares a minute, 250,000 shares a minute is what we need to be averaging to hit 100 million shares traded for the day. So far, every single one of our minutes is well above that. So we're looking really good on volume. Remember, volume is everything. Try to avoid looking at the price. The price is just a scare tactic, just like MCon just said. 100%. Look at the volume. The volume is that's the key indicator, guys. More than anything, I could care less about what the price is going to be every single day. I really could care less. I mean, of course, I'm going to get excited when it's high, and of course, it bums me a little bit out to see it dropping. But what matters to me more than anything is this volume, because this volume means pennies, like pennies, dollars, hundreds, thousands, $100,000 being sucked out of these hedge funds' pockets. This is costing them money to drop the price like this. It is completely costing them money to do something like this. So this should be, to me, this is encouraging. I like seeing this. Now, of course, we know that they usually try to start dropping volume around 10 a.m. So it'll be interesting to see how the volume plays out here. What you'll probably see is you'll see release points here as we're moving down in price. Like this is one of them right here, where they kind of let it release to see what the market's going to do. If the market will take off on its own and continuing to sell, they'll let it run and let the market do the work for them. So it just depends. It looks like we just hit a level of support at 40.95 and bounced off of it a little bit here. So this level of support might be difficult for them to get past. I'm looking for a wall here. Doesn't seem to be much of a wall at 40.95, but I see one at 40.75. But they'll let it, as it steps down, what they'll do is they'll let it go for a little bit and see if it runs. If it runs, then they may start attacking it back down again, or they might actually let it go depending on how hard it runs. SSR is key, super key. Who said that? Silent Streamer. Yes, $40.55 is SSR. SSR was triggered. This is what I was saying earlier this morning. These are key times, super key times. They are allowed legally by the SEC to create synthetic naked shorts during these periods of times when SSR is triggered. They had to hit that number. This is what synthetic price failures are all about. They're all about the ability to be able to create naked shorts. That's everything what this has to do with. It's an attempt to be able to create synthetic naked shorts. It's an attempt to try and get people to sell their shares. These numbers, they hit all the time in the past. If you look at GME, the same stuff happened. Yep, Silent Streamer, you get an award, man. I will send you one of these Gorilla Rocket stickers if you contact me and give me your address. I'm gonna send you a Gorilla. Let's see if I can. I'll probably send you the big one. Thank you for pointing it out. If you contact me and either through Reddit or Twitter, give me your address and I'll send that to you. So it looks like we had pretty much a rebound off that 40.95. So again, this gray zone, 40 to 45 bucks, is such a dangerous zone for us. Super, super dangerous zone because it's so easy for the hedge funds to be able to manipulate between this. I think, this is just my opinion, take it for what it's worth, but I think a lot of investors see the $40 mark as kind of that point to where they decide whether they want to jump in or not. If it's over 40, they kind of go like, I'm not really sure about it. If it's under 40, they're like, yeah, I'll take a go at it. And so they invest underneath 40. That stopping point to where they kind of maybe start thinking like, well, maybe I'm missing out on something is when we get up above 45 and they go like, okay, it's under 50. I'm going to get in right here. I think this is a good point to get in. Address, account number, and password, please. And let's see, I need to know your social security number, your birthday, and maybe like your mother's maiden name. The first car you ever owned. A couple of the addresses that you've lived at in the past. Yes, Eric, they had a security breach on Robinhood and the price went up yesterday. You know, interestingly enough, talking about needing information, go back, Eric, and you know, remember Say Technologies was purchased by guess who? Robinhood. Guess who has a lot of people's information out there? Yushin is saying Robinhood won't let me transfer funds to Robinhood at this time. Anyone having an issue? I don't have Robinhood. I don't have Robinhood. I know somebody who has Robinhood. I would have to confirm that through somebody else. Let me send out a text message. Text message is out. We'll find out. I provided a list before, guys, on here on who are the good brokers and who are the bad brokers. I'm gonna pin my MOASS checklist again to the top of the screen because that list is inside that post. I'm gonna pin this to the top so you guys can see it. This is your MOASS checklist. If you want MOASS, you need a checklist. So get your checklist on, go through it, and start looking at some of the things that you need to prepare for. This is not going to be just as simple as a trade and making millions and millions of dollars, or hundreds of thousands of dollars, or however much money it is that you stand to gain. Okay, Sandy's coming in saying she has Robinhood and not having any issues. And I guess, I might as well just post to you guys this is the link to the good, bad, evil, ugly brokers back in January. Right here. The one I just posted, that's a list of all of the brokers and what occurred or what went down in January with them. And that's, here's the thing. Do we know that every single broker is going to act exactly the same way this next time around? No, we don't. My source is saying that there's no problems. They're not having any problems with Robinhood either. So I have two sources now that's not having any problems with Robinhood, Yinshin. So it could possibly be something on your end. Yes, a list of villains. I think what I like the most about the list is it just doesn't sit there and tell you like these are bad brokers and these are good brokers. It actually goes into great detail to prove to you why they're good and they're bad. Not just it's not just saying this is a bad broker, stay away. I value data that supports, an argument. And so if somebody's going to sit there and say that there's a bad broker out there, I want to see why. Why are they saying that? And so I think that link is really, really good for seeing those things. And at the very least, look at what that information has to say. Like if you have one of the bad brokers, look at what that information has to say and expect to know that you may be dealing with some of those issues in the future. What price is that, Sean? If you don't mind throwing some prices out there. Eric, I fully believe that there's going to be brokers on that list that are on the good side that may end up falling into the bad side. I wouldn't put it past it. I think we're going to have an extraordinary event on our hands, and extraordinary events cause extraordinary measures. And I have a feeling, I have a full belief that more brokers will have issues this time around than last time. Yeah, if you guys are experiencing internet outages, if you're experiencing inability to collect data from something, if you're experiencing problems with your broker, let me know. Let me know because I will do everything in my power to either confirm that your problems are on, either systemic across the board or if it's just something that you're just experiencing. Looks like we're going a retest of 40.95. Not much of a wall there, but there are a few walls set up below it. The bid side of the order books looks a little heavier than the ask side, which is that's good to note. I have been wanting to play that creep song for the longest time, and I always felt like I felt like it was like very like it's a dark song. It's such a dark song. But you know, I felt like if there was anybody, oh, Gary Gensler, oh, he's still here. He's listening. Hold on a second. Yeah, Gary, I wasn't talking about you. If there's anybody who could feel like a creep right now, it'd be good old Gazer Beam Gary. What am I doing here? What is he doing? What is good old Gazer Beam Gary doing? We'd all like to know. So we're holding that support line at 40.95 pretty well as it stands, but it doesn't mean it can't break through. Yeah, like it just did right now. Tesla's dropping. It's all manipulation, Roberto. All manipulation. It's 8:51, guys. 9 more minutes, and I'll do the first technical analysis, and we can go through and we start looking at some of the numbers. We'll see what's changing. Evergrande has to make a payment tomorrow that will go into default. Also, we should hear about approval for NSCC. NSCC 2021-010 got delayed to December. I've already heard through the grapevine that got delayed to December. I think it was mid-December. I don't remember the exact date. Maybe the 16th, maybe? Somewhere around there. So there was a delay on it. You're never down crazy until you sell. There's no realized losses until you sell. All right, Sean's saying 39.10 right now. It's moving target for every 20 cent we go down. It moves down 1 cent. 90-day SMA crossover 20 today and is sitting at 39.45 at this moment. SSR was a big trigger. SSR was a big trigger. By triggering that, and notice guys that, I mean, SSR for today, what was it set for? 40.55, $40.55. Like they literally dropped this thing down to 5 cents underneath the SSR trigger price, and then let it run. 5 cents. I mean, if that's not accuracy, I don't know what is. So SSR will be on for today and tomorrow, which implies that the price will there will be more halts on sharp increases in price, which could benefit hedge funds who don't want this to get out of control. So think about tomorrow. If they plan on price rising really fast tomorrow, you know, it will give them an opportunity to be able to control the price as it's rising up if there's halts. Also, Monty, on the Evergrande issue. Evergrande, I was just reading this morning, there are some reports that they didn't even make, there was not payments on the last, they're in default for some of the last payments that they were supposed to make. The payments that they said they made the last time around, some banks have still not received payment, according to news reports, and so yeah, they may have already defaulted. Sean's saying a nice W set up for 40.05 for the close today. Let's check it out. I want to see it real quick here. Okay, I got you. It's a weird looking W. Maybe. Yes, I did read that, Bill. They did sell. They had a bunch of sales going on. I feel like we've got a little bit of okay. So volume did start dropping. It looks like they started dropping volume at 942, maybe 941 ish. They dropped volume down quite a bit. They got it under that 250 mark. And volume still continue to drop a little bit here, but price is starting to hike back up, so we'll see what happens. We got about 4 more minutes and we'll check everything out here. We'll check out all the data. And you guys can see on the left-hand side, the SPY is already down 0.24, 0.25. A lot of hits going on here. Excuse me. Surprisingly, though, Amazon is up almost 1%. Looks like we got a buy wall at 4065 and 4062. And sometimes those just disappear and they're not really buy walls. They're something entirely different altogether. In my opinion right now, it kind of looks like we have a wedge formation kind of happening, but it could be, and we'll have to see how far down the price comes down here in the next few minutes. Okay, so Yishin is talking to Robinhood support, and there is an issue with transfer of money in and out, and it's not just him. Okay, that's good to know. I'm gonna notify. Thank you for updating us on that. Appreciate it. And that SSR trigger is huge. That's really huge for them. They really need that to create more synthetics. And it's been a hot minute since we last triggered SSR. It has been a while. In fact, I don't know what it is, but somebody go out and look that up because I'm about ready to log into all my stuff and do the technical analysis. But I would love if somebody could go out there and check and see what when the last time was that we triggered SSR. I want to say it's been at least a month, if not more. But it's time, so I'm going to take you guys over to the other page, and we're going to check everything out here. Let me update my screens. Since this is the first time of the day that we're going to go ahead and go through all the data, let me fix this. This is bothering me a little bit here. Since this is the first time today that I'm going through all the data, I'm going to go through it slowly, more slowly than usual. People who scored points for price points predictions yesterday, Eric, myself, and Duncan all scored point yesterday with our price predictions. For the day today, I have everybody but everybody but Adam's price prediction. I'm in at 45 to 48. Eric is in at 41.2 to 44.2. Duncan is in at 43.2 to 46.2, which I think is so odd that those two guys both went with like 0.2 numbers. I don't know what's going. You guys are doing some kind of ESP thing or something. I'm not sure what's going on with you guys. Two individuals who don't have any contact with each other across the pond, and they're coming up with numbers like that. That's pretty crazy. Anyways, Adam, I'm gonna text him real quick, see what he's got to say about this whole ordeal here. See if he's got some kind of prediction. If he doesn't have a prediction, Monty's going to get to fill his spot, since I got a price prediction in for Monty. Let's see here. Short exempt volume was an increase, obviously, as volume increases, which it did. Our total volume increase day over day was a 75% increase. We had short exempt volume increase by almost tripling. Not quite. I mean, it was under triple, but you know, it's a lot more. 304.5 thousand total in short exempt volume. Utilization dropped today almost a full percentage point to 85.77. And day over day price increase yesterday was an 8.06% increase in price. If you take yesterday's and Friday's number, add them together, you get a total of 12. And so, in my opinion, that meets 2 of the 3 days that we need to be above 5% increase in price day over day for 3 days in a row. So that means that we would only need to see a 3% increase in price today in order to complete that and have that be a green indicator. Off exchange. Let's go ahead and update off exchange. I want to say Office Max every time I read it. I don't know why. $51.2. That's about 2% less than we would normally see right now at this time. So 51.2% trade off exchange so far. Let me update Ortex. Ortex currently showing a return of almost 700,000 shares for this morning, which is going to decrease the estimated short share interest of the free float down to 16.44%. And moving up to the top left-hand corner right after I move some pages. Okay, moving to the top left-hand corner, institutional ownership, 142.8, 142.8 million. It's now showing 142.916. Institutional ownership consistently going up since I've been checking it and recording ever since I felt like there's been a big push on DRS. I'm expecting to see that to start dropping down, but it's going to take like 3 months for us to get that kind of data from Fintel. Max Pain for today, currently at $40. That was an increase day over day by $1. It was 39 yesterday. Oh shoot, hold on a second. My institutional ownership on Fintel made me log back in, so I'm trying to fix that. Moving on though, let's go ahead and update the options chain and see where we stand on that. Okay, looking at the options chain, highest level of volume currently is at a $50 strike price, which is where it's actually $5 higher than where we left off from yesterday. Yesterday we had call options at 45 strike price with 39.1 thousand contracts created for the day. Today it's $50. I think this is being overzealous, and that's just my opinion. I'm entitled to that. 13,000 contracts so far this morning at that $50 level. On the put side, highest level of volume currently at a $34 strike price. Kind of an odd number. Let me just drive up and down and make sure I'm not seeing the wrong. Yep, that's it's just kind of an odd number. It was 35 yesterday. It's now 34. Total volume yesterday at 35 was 14.1. As it stands right now, we have 4.6 in volume at $34. So quite a big spread. What is that? 15, 16 dollar spread between the two strike prices with the highest amount of volume. Pretty large spread. I'm not sure what to make of that, honestly. I think both sides are confused. Both sides seem to be a little confused. The optimism for both the negativity and the positivity are equally outweighing each other. Let's go ahead and move over to the other page. I really just don't know what to make of that. On loan amount, on loan and on loan average age per day. This is something I kind of covered a little bit earlier this morning. Instead of continuing to increase towards each other, increase in closing the distance between these two values, they started decreasing again. So we had on loan amount decrease ever so slightly. I think it was like 1.2 million. Let's see, it went from 1.36 to 1. Sorry, it's 0.9. 0.9 million shares returned as of yesterday, and then on average age per day started increasing again. So it's heading back up. We keep getting dips on this. We keep getting dips, but it keeps continuing to rise. So I would say that there's an inverse relationship, delayed relationship to on loan average age per day and the price. So we might see kind of a sawtooth action of price movement going upwards. Maybe like a mirrored image almost of price doing something like this. Shares on loan. Oh, we saw utilization go down. Utilization went down from, I can't read this, 86.54 down to 85.77. And then when I kind of pulled up my cheat sheet this morning and took a look at everything, the reason that is that there was more. They found about just slightly under 1 million shares more to borrow, which would have been the ones that they decreased the on loan amount by. So that would be, and because the total amount of shares that were available only increased by 0.1. So that's why utilization went down. Just more shares available to borrow. Which obviously the short share interest is going to, as on loan amounts go down, so is the short share interest of the free float will continue to dip. I'm blinding you. Orders by Fidelity customers, AMC currently 7th with 53% buys to 47% sales on the orders. And GME was, I think, in 24th this morning, moving up to 20th with a really strong 64% buy to 36% sale. That's good. That's not really strong, but it's above 60-40. Anything above 60-40 is good. I love seeing that. That's awesome. They're doing great. Go GME. Taking a look at AMC and borrowing against AMC. I only see returns so far as of right now, but they have already borrowed so far this morning that we've witnessed 3 million shares. There is 19.4 thousand contracts in the money on the calls, 92.5 thousand contracts out of the money on the puts. This number has gone back up to a number that is, in my opinion, is just way too damn high. It's over 100K, so it's too many out of the money calls. Of course, this price drops, that happens, but yeah, people got caught on the dip last night for sure. Taking a look at the market. NASDAQ is down 0.8, Dow Jones is down 0.45, S&P 500 is down 0.52. The market is decreasing pretty heavily. 4,930 decliners to 2,234 advancers. Robinhood is down 3.2%. Amazon is up 0.53. Cinemark is down, up 1.48. Doge is down 3.32. GME is down 2.9. We are down 10.17-ish. And our inflow versus outflow currently even. Slightly more inflow than outflow. Ever so slightly. Taking a look at our volume. What happened? Let's see. Looks like we're on pace for 109.1 million shares for the day today. My volume prediction is between 40 and 60 million. As it stands, if nothing happens between now and the end of the day, my bottom number might be really close, but I'm really hoping to see a spike up in the middle of the day. I'm really hoping that my volume prediction is off, but we'll see what ends up happening here. Taking a look at the intervals. On a 1 hour interval, we currently have more selling pressure than buying pressure with an RSI at 34.69. It is definitely low. On a 30-minute interval, currently we have more selling pressure than buying pressure with an RSI underneath 30 at 27.12. So it's oversold, signaling for oversold. On a 5-minute interval, we have more buying pressure than selling pressure with an RSI that's already almost had well, it's got 3 peak points down underneath 30. And I feel like, I'm going to take out the extended hours. I just want to take out the extended hours because I kind of want to draw a trend analysis based off of that without it. I don't think we have a descending. I think we have a wedge. All right, let's see if JP gets it right today. Wedges are very difficult to tell which side they're going to break out of. We have a descending wedge. I would say volume's falling, but price appears to be falling as well. So volume falling, price falling. What does that mean? JP for the win. It's already pretty obvious. I'm finally getting back to where I can see what you guys are writing. Yinshin saying that he can't deposit money. They won't let him do an instant deposit. He just actually I don't even know if Yinshin is. I'm not sure if he's a male or female. So they they just talked to Robinhood, and there's a problem, but will not send the problem notice to users. JP might not be watching right now, but Crazy Peppy for the win. It is bullish. Taking a look at your volume trends, decreasing volume and falling price is bullish. It is indeed bullish. Yeah, Bill's got a good point. Tesla is BB rated. With the new some of the new regulations that are in place, they if they had a long position, if a hedge fund had a long position in Tesla, they would no longer be able to use Tesla as collateral. Correct me if I'm using the wrong word there, but I believe it's collateral. Ivan's reporting he can't buy any more shares. We had a very similar problem that was reported on eToro. Okay, we had it reported yesterday that people's orders were being canceled of AMC because there were no more shares left on the lit market to purchase. Man, I almost wish I had. I wish I had saved some of my money in my Fidelity account just so I could test buy a single share. Actually, I think Crazy has the same. I think he also has Fidelity, and I'm pretty sure he just said he bought some earlier. So not all of them are having that problem. Going back to that list. eToro. Interesting. I don't see eToro on that list of horrible, bad, neutral, and good brokers. I could have sworn it was on here, though. I just don't see it. Oh, yes, it is. I hate to break it to you guys, but both Robinhood, Interactive Brokers, both US and Canada, and eToro are underneath the horrible brokers, restricted purchasing of certain tickets and lied, gloated about it section in the link that I provided earlier this morning. If you're part of those, go check that list out, guys, and understand some of the problems that you're going to see. If you have those brokers, you're going to see more than likely you're going to see the same problems that they saw back in January. Slapping the ask is entirely up to every individual. In my description that I have here on the show, guys, that you'll see that there's certain levels of participation as an ape, and that's kind of like, that's an advanced level if that's something that you choose to do. That definitely helps to increase the share price by buying the ask. But I can't suggest what you should do. I guess I kind of do. I guess I kind of did. Looks like we're getting a lot of support off that $40.95. There's a couple different news articles out here. I'm going to click on them real quick. Kind of want to see what they're saying. I love how there's like, I didn't see like any just mainstream media. I didn't see anybody talking about the data breach on Robinhood at all. Credit Suisse upgrades Cinemark Holdings to outperform, raises price target to 25. This, I don't understand this part, and I would assume that it has something to do with the fact that maybe it's the debt that AMC holds, and Adam Aaron talked about that in the earnings report. But I don't understand how they can give, I don't understand how anybody can give AMC a rating of $1, but then turn around and give Cinemark $25. I just don't get that. I know $25 is what we're over already, but I mean, it's kind of weird to me. The news for AMC is AMC CEO says Shiba Inu is the next one on our cryptocurrency hit parade as theater chains explores adding Dogecoin killer. I'm not going to read all that. JP, so here's the thing, right? And I've been saying this for a while. Your broker will trade shares in house, but if they can, right? So let's say for example that the total amount of retail ownership inside of your broker is we'll just say 1 million shares. They're going to be required to hold 1 million shares, but they're also going to buy some for themselves as well. And the reason that they do that is because it allows them the ability to be able to trade in-house before sending out the order. So if they can complete or process an order very similarly to how when they send orders out to Citadel, or I can't think of the other one. It's escaping me. But they can process these orders in-house, and if they process these orders in-house, they can actually make money on the front side of your share ownership. This is why when you trade within your broker, you're allowed to have partial ownership of shares. So if you have, for example, like 1.0852 shares, it's because your broker is divvying up shares that they hold within their own institution. Virtue. Thank you, Sean. Thank you. Oh man, that would have been driving me nuts for a while. So if they don't have enough shares to complete an order, or if it doesn't, if it's not within their best interest to try and make money off of your order because it's outside of their price range, then what they'll do is they'll send the order to Citadel, or they'll send the order to Virtue to try and find the best order, and that's where they'll do the exact same thing. They'll trade it in-house to try and get the best price. But this is how it allows them to manipulate the price. So if your broker has lent out all their shares, and they don't want to risk getting in big trouble, and all the shares that everybody inside of their brokerage has them all purchased up, then if they want to buy shares, they'd have to go to the lit market, and if they can't buy them from the lit market, then you're going to obviously receive some kind of message telling you that you can't buy shares because they can't get a hold of shares. We have not seen this to date. Now, the whole reason that we're tripping SSR today, in my opinion, is because the market makers yesterday failed to create liquidity. They failed to create liquidity yesterday. In order for them to create synthetic naked shorts legally, we have to be in an SSR tripped state, which we tripped to this morning when we hit $40.55. So that's pretty big. They needed to force that to happen in order for them to create naked shorts. So I would imagine market makers are creating liquidity now, meaning that they're creating synthetic naked shorts for you to be able to buy. So this problem shouldn't continue for much longer. The availability for you to be able to purchase shares off the market should kind of tend to disappear once they create these naked shorts to fulfill orders. I mean, they can't, JP. If they don't exist, they just can't buy them. They should be forced to. But if nobody's, I know what you're saying. You're saying, look, there's a whole ask order over here. There's a bid and ask side to this order over here. They should be required to go out and buy them. You're right, 100%. I mean, we're seeing right now that there's shares showing up on the lit market as being available to be purchased. And I don't have an answer for that. I really don't have an answer for that. My guess is that in a couple months from now, we'll figure stuff out. I don't know when, but at some point, we're going to figure this stuff out. So JP, here's the thing. You should be able to place an order through your broker if you, depending on who you use as a broker. Some of them allow you to buy directly from the market. So you should be able to create an order. The only problem is that your order would have to be, I believe, I wrote these down a long time ago. Let me see if I can find it. I believe that you would have to buy them in quantities of 100 shares or more. I may not have it written down. I have so many notes. Oh, I do have it written down. Here it is. I found it. Only I don't know if this is correct. Let me go back and see if I can find it in my post. I have it written down here, but I want to go back and make sure that I get this correct before I say it. Let's see. I'm looking to see which markets, if you want to buy directly from the lit market, which ones to use when you're buying, just so you guys know. You may not even care. I don't know. I didn't save that one along. Maybe I did save it. Hold on a second. It might be under my save stuff. Oh, yep. Here we go. How to route to, here we go. I did have it there. Yes. Okay. So my notes were correct. XNYS. So I had originally, when I had first gotten into this, guys, I'll show you my notes. This is so bad. Yeah. Oh, let's see if I can put it up here. You'll notice down at the very bottom down there it says XNYS. This is how bad my writing is. XNYS, that's NYSE. So I wrote that one down. That's if you want to trade directly, it's XNYS. So you should be able to, if your broker allows it, you should be able to trade through your broker using a direct purchase through the XNYS, and I can provide, if you guys have Fidelity, I can provide you a great link, because I actually did save the link. I'm so glad I saved it. This is a link on Fidelity on how to do this, and I believe, if I'm not mistaken, I believe that they've enabled this through the app version as well. You have to be, I think you have to be using the beta version of it, but I do believe it can be done through your app as well. And that's how you would direct your purchase directly through the lit market. Unfortunately, guys, I don't have that information for other brokers. I only have it for Fidelity. At the time when I was collecting this data, that's all I was concerned about. I apologize that I wasn't keeping track of all the other brokers. So I don't know which ones do which. But if your broker does allow you to purchase from the lit market, that's the exchange that you want. And like I said before, I do believe that you're required to have a purchase of 100 shares or more to make that purchase. I'm not 100% certain, but I think that is the case. So what's going on right now? I feel like there's a pattern formation happening here. If we saw consolidation at $41 for the next 2 hours, and then the price had an increase to around 42 to 43 bucks, probably around 43 bucks, and then lasted there into the aftermarket hours, then I would say that you have an inverted head and shoulders. Check the following on the hourly time frame. I see an upward channel or possibly a wedge within beginning of October, And the second point is that we have now tested the upper boundary of the 3-month wedge we broke out of on November 5th. Yes, TD Ameritrade, also Charles Schwab, I believe, as well, Bill. Just throwing that out there. I believe. 1 hour. Let's check this out. I do have a massive wedge that I have, and I actually realized later that this is why I drew that big old blue box in here. For a long time, I didn't understand why I had drawn that in there. You said back on October 9th, a wedge formation happening. Let me go back out to the day here. Let's see, October 9th. So basically it looks to me like you're saying from like the 13th down, so like you're basically drawing the wedge from here down, which is definitely a possibility. I mean, I had drawn my wedge from the very top way back here, but I like what you've done a little bit more. Whoa, this got adjusted somehow. I like what you're doing there. When I had drawn mine out, I'd actually taken it from here. And I believe the secondary point was here. And so that's why I had drawn out this blue box here. I felt we would be seeing a breakout. Actually, that's not right. It's this one. There we go. Might be this one right here. Somehow this got moved. I'm going to have to lock it in place because I keep forgetting to do that. There we go. Now you can see my box falls right in just like I normally put them with just the tip left out here. So I had drawn this out. I don't even remember how long ago it was that I put this wedge formation in here. So yeah, I mean, I feel like that's pretty accurate. I think we're kind of looking at the same thing. And if that's the case, you know, if I draw back down to the 30-minute scale and kind of pull back out to where I drew the cup and handle, if that's the case, and we drew this handle, we drew the top of the cup and handle formation, extended it out to kind of cross through the box here a little bit. I don't know. Man, 47.50 is low. It should have gone up to 49. I'm wondering right now if we completed this cup and handle formation at 47.50, and if we did, then that's like way too early. It should have been in like 49.70. But it's entirely possible. It's entirely possible, right? Like if we completed the cup and handle formation. Come on, light up. In the after hour. Oh my gosh, are you serious? But that would have been, I mean, it should have shot up to 49 at the least. So it dropped back down in price here. You know, it was kind of expected. I kind of figured we get to 49, drop back down to 45. So if 47.50 is our stopping point, then, you know, figure the same price, $4 down from that, which would be 43.50, and we're definitely underneath that level right now. So, we might just see a bunch of consolidation, or I don't know. This blue line here, this blue line down here, that 20% drop is definitely in the realm of possibilities. Hey, you're welcome, Crazy Pip. Yeah, I'm if I can provide information, I'll do it. Let me see what you're writing, Bondaro. Sorry, 1 second. From October 29th. I mean, yeah. I mean, it's gonna be the same thing. It's gonna be roughly the same thing. From what I drew, it's pretty close to the same. I'm just gonna leave mine just because I drew it on the day. I'm okay with it because we haven't broken out of it. If we haven't broken outside the wedge formation. So, but what we want to see, ideally, let me go back to the day. Let's see where this time frame is kind of pointing at here on a trend analysis. Let's do trend channel to here. And it's definitely pointing at the bottom side, which means a breakout. Based off of what I've seen in the past history, that would be a breakout going up. Oh no. Oh, I thought it deleted something. I gotta lock stuff. I gotta remember to lock things. Okay. I don't even want to draw this. It's just ugly. What's happening to volume? It's definitely drying up. Most of our minutes are under 100,000 now. So volume's still falling, but price is kind of consolidating right now. I don't really feel like it's up or down, but let's just check it. Yeah, it's more down. So price is more down than up. And I feel like we're kind of following like a slight downwards trend. Very slight. I feel like we should have a breakout going up here soon. And I think all the rest of the data would support it as well. The 1 hour currently showing RSI at 3694. 30-minute interval is showing 3050. A 5-minute interval is showing 4012. The blue line, Sean, is 38.25. That's your synthetic price failure. It's 19.5% from the previous high. So the previous high was 47.50. So yeah, that 38.25 is 19.5% down. That would be in the realm of what I consider to be a synthetic price failure. And you know, obviously hitting SSR today was part of the objective. The only way they can create liquidity legally by creating naked shorts is through triggering SSR. If you're talking about the solid big blue line, if you're talking about the one above it, it's 42.21. I'm not sure which one you're talking about. But the red line below that, hey, where'd my red line go? Son of a gun. I must have somehow deleted my red line. Well, time to add my red line back in. Okay, so the red line is going to be 21.5% down from that previous price of 47.50. That's how you know we've got paper hands if we hit the red line. So let me just do this math real quick on this. Uh, 37.28 would be the value. So 38.25 is a 19.5% decrease in price, where I view synthetic price failure starting, which is for the most part just basic manipulation down to see if they can drop the stock price to get rid of. It achieves a couple different things, right? It puts us on SSR. It tries to discourage investors from continuing to invest or selling their positions, and it gets them to new levels of lows. So again, if we hit this red line down here, then there's some paper hands that are going on. So where you anything beyond 21.5% decrease in price based off the modeling that I've done in the past is that you know, that's going to be the point to where you're going to see like huge amounts. Like it'll drop from 21.5 to much higher levels, like 40%, before you see turnarounds. So if it does continue to drop below 21.5, you might see a big run on sell-offs. We haven't seen that to date. Those usually don't start happening until you get into the big meaty chunk of a squeeze. You know, those big decreases of more than 20% don't normally happen until later. So if we were to see that right now, I'd say buckle up, because quite honestly, you see a rise usually first before you see those big dips, and I don't think that the rise that we just saw up to 47.50 would count for that. I don't believe it will either. I mean, I don't want to say that it won't, but at 38.25, I think that is, it's a bit low, but they will definitely try to get there. If they find investor weakness, you bet you they'll get there. If they find people selling off shares on the way down to that price range, they'll keep knocking it down, and they'll keep on testing it until they get to that 20% point, and then they'll stop. And if you know, I know it sounds hard to believe, but if you want to see the truth on that, go back. You can go back to my show. I don't know. I want to say it was like last week or something. Let me go back here and see where it was. Right back here somewhere. I had the lines set up after 44, the 44.44 that we had hit. I had those blue and red lines set up. So if you want to go back to the show and look at it on, you could go to 1025 and watch the show, or you could go over to 1027, 1028, 1029. All those days I had a blue and red line that was a 20%, 19.5 and a 21.5% down. I just moved them this morning because of our new high at 47.50. But these prices that we hit down here, yep, sure enough, they triggered that 20% dip. We actually hit the 21.5% on this 33.90. So, and they'll test it. They'll test it over and over. When they hit 33.90, that was 21.5%. It was more. I think it was slightly more. Let me see how much it was. It was a 23.7% dip. And when they hit that, I knew more attacks were coming because, if they do find paper hands on a dip like that, then what they'll do is they'll let the price drive back up and they'll test it again, and they'll drive it back down, and they'll let it rise and they'll test it again, and they will keep testing it over and over and over to see if they can't get investors. Once investors stop selling, that's when they let it go, and so that's why we started seeing this run up. So when we get to this new high here, then they stop the market. There was this dead zone. We have that dead zone between 40 and 45 bucks. They drop it back into that dead zone. No more buying happens. Then it gives them an opportunity to be able to really start shorting the stock again. That dead zone's always going to be there. 40 to 45 bucks. That's why I keep repeating it over and over and over. It's a dangerous price zone for us to be in. Closing yesterday at just over 45 bucks wasn't enough. We should have been a little bit higher. If we would have been a little bit higher, we probably could have stayed out of the gray zone. But since we were just pennies over, it was really easy for them to knock it down in there and just continue to drop the price. The good news is that if we break down below $40, we start to gain support. So that's, it'll be very difficult for them to get it back down to 38.25 without meeting a lot of resistance along the way. And I don't have a Fibonacci drawn up here to show you, but I can guarantee you there's a lot of resistance on the way down to 38.25, and it's going to cost them a lot of money to do something like that. 7 more minutes till we get to technical analysis for the next hour. I'm going to go ahead and pull up the news and see what we got going on here. MassLive.com reporting that AMC to sell popcorn outside of the movie theater starting in 2022 with fresh options at new locations, which I'm sure you guys are all aware of. A lot of news articles talking about the AMC exploring the addition of Shiba Inu as a crypto payment. You know what's interesting, Sean? I don't know if you're still listening or not, but one of the things that I find very interesting is that it may be hard to be looking at the price right now, but I almost guarantee you that there's going to be this zone right here, probably around like 39 bucks, where it's going to get really difficult. Like if we were to drive down to 39 bucks, it's going to start to get really difficult for us to probably watch this. And I'm going to throw this out there to anybody who's listening. If we get down to that kind of a number and you're getting discouraged, walk away. You don't have to watch the show. This stock is going to continue to go up. It's going to continue to drive up. Don't let the psychological attacks work on you. Walk away from this. We'll be here tomorrow. We'll be here the next day. If something crazy happens, I'm sure you're going to hear about it in the news somewhere from a coworker, or somebody's going to say something to you. Somebody's going to text you and be like, "Holy crap! Look what's happening to your stock," because you've probably talked to somebody about it. And you're going to hear. Don't let these psychological attacks affect you. You get to decide what you're going to do with your money. Don't let the hedge funds work on you. I mean, welcome back, Ali. It's good to see you back. Back online with the transfer. Okay, cool. Robinhood is back online with transfers. Mark, or Ali's saying Mark Codes. Am I saying his last name right? Is it Codes or Coheeds? Coheeds? I don't know how. Coeds. Mark Coeds tweeted that he has a plan to make the shorts cover. He was behind the overstock electronic dividend. I went too far there. I went way too far. Overstock didn't go from 3 to 123 overnight. Mark Cajones. I like yours. Yours is better than mine. Mark Cajones. I'm sorry, I'm lost. My mind went someplace else there. I lost myself there in a moment. If you guys send me messages on Reddit or Twitter during the show, I don't normally check them until I go to break. Just so you know, I may not get them right away. Because I'm just now getting one of them from somebody, because I actually went into Reddit to see what was going on. Yeah. Um. I'm gonna hold the discussion with Delusion. If you're watching right now, I'm gonna talk to you offline about that. I think I don't know. I don't know enough about what you're talking about to be able to say for 100% certain that you're right or you're wrong. So I would have to do more research. And basically, I'm just going to say that I'm just going to kind of briefly touch on what it is that Delusion wanted to talk about, was that creating naked shorts is not necessarily illegal. I'm not a financial expert, but my understanding, and this is just my understanding, is that during certain times, when the need is there to create liquidity, there are stipulations that are provided to where liquidity can be, or naked synthetic shorts can be created by market makers. The question is is that always or only under certain conditions? And there may be differing opinions as to that answer. So I would have to do some more extensive research to be able to comfortably stand behind what it was. I guess I said earlier, in that hitting SSR is ideal for them to create naked shorts legally. I do know that there's information out there that would suggest that what I'm saying is true, but I'm not, again, completely solid in my information on that. Ollie, I like your answer there. Nothing is illegal if you don't get caught or punished. That's not true. Just because you aren't caught speeding doesn't mean that what you're doing is still, illegal. That's not true. It's still illegal. It's just, whether or not there's a punishment. I like the perspective you took on that, though. I do like that perspective. There may be blind eyes being turned for our current situation. And that might be a good way to put it. In other words, like, I shouldn't say that. Some of the hedge funds may be seen as like judges, right? And the police aren't going to pull the judges over for speeding. you know, uh, just because, that's not going to go very well for them. Yes, absolutely. Absolutely, JP. It's time, guys. It's time to do technical analysis. Let's get to it. Before Fidelity logs me out and says I have to relog back in again. Taking you guys over to the other page. Oh no, it's all bright. Why is it like that? There we go. Let me refresh my pages. Updating off exchange. A little behind where I feel like we should be on that. Normally around this time, I think we'd be around like 58 or 59%. Okay, everything's updated. Off exchange currently showing 53.88%. That's typically, in my opinion, where we would be an hour ago from now. Normally we see that much thrown in there. The borrowed change for the day today is currently at a return of 1.46 million. I'm just gonna keep saying it, guys. I know some of y'all have heard this like a million times, and you probably get sick and tired of me saying it. But I don't know who's new here, and I don't know who's not new. But if we see that number be positive or negative, 3 million, typically speaking, in the past, I end up seeing price increase. So we're pretty much halfway there to being on a return. I don't know what, don't ask me why. I have no idea what the reasoning behind that is, but it doesn't seem to matter one way or the other. If we have a return or a loan of that amount or more, we usually see price blow up, upwards, blow up, increase. But the borrow change going down, or a return of shares, means that the estimated current short share interest is going to decrease to 16.32%. On the call side, Current strike price with the most amount of volume is $50. There was 13,000 contracts there earlier. It is now up to 17.7. This is not what I want to see happening. Be careful, guys. Just be careful. If you're playing options, be careful. Do paper trading first. Make sure you know what you're doing before you get involved in that. Or if you're already involved in it, make sure you're winning more often than not. Paper trading, then move into the real deal. Just be careful. On the put side of things, highest level of volume an hour ago was at a $34 strike price. That's actually changed to 40, so it's gone up. That's good because that's kind of identifying the fact that they don't. To me, that seems like they're not expecting to drive the price too much lower than $40. So we have 8.1 thousand contracts. It was 4.6 at 35 or 34 rather earlier. It's now 8.1 at 40. So we have just slightly higher than 2 to 1 ratio in volume for calls over puts with a $10 spread in strike prices. Fidelity customers. AMC was in 7th an hour ago. They are now in 8th position with a 56% buy to 44% sell ratio, which is good. Not quite as good as I'd like to see it, but it's good. GME, let's see if they're on the list. They had moved to like 20th, I want to say earlier. They're in 21st now. With a nice 67% buy to 33% sell ratio. Not bad. Looking strong. No shares borrowed in the last hour. 19.4 thousand contracts in the money on the calls. 92.5 thousand contracts out of the money for the puts. That is actually getting really close to breaking 100. I would love to see it break 100. 100K. But we still have this number being too high. 163,000 contracts out of the money on the calls. I know it's only Tuesday. I know we've got time still, but I just want to see that number higher. Or lower, rather. Sorry. Not higher. Taking a look at the markets. NASDAQ is up it's up, but it's red. No, NASDAQ is down 0.39%, Dow Jones is down 0.4%, and the S&P 500 is down 0.36%. We have 4,368 decliners to 2,771 advancers. The market is red. Amazon, amazingly, the only one that's green here. Robinhood is down 2.26. Amazon is up 1.46. Cinemark is down 0.37. Doge down 2.86. GME down 2.68. And we are down 8.81. Our inflow versus outflow. Very close spread in contrast. Amazingly, I really don't understand these numbers. They really make no sense ever at all. There's a 3-point spread between inflow and outflow for an almost 9% decrease in price. These numbers just don't add up. They just flat plain don't add up. That makes me feel like my whole world is upside down every time I read that, and that makes me laugh. 100 minutes. 100 minutes, is that how long we're into the day here? 60 plus 40. Yeah, 100 minutes. So 16.32 divided by 100 times 390. We are on a pace for 63.6 million shares traded for the day today. That is drastically lower than it was an hour ago. An hour ago, we were on pace for 100 million, slightly more than 100 million. My prediction for the day today is 40 to 60 million. I really wanted to do 30 to 50, but I went on the edge because I really felt like there was a possible chance that we might see a run up in the later half of today, giving us some extra volume. So I went ahead and tried to go. I went against my gut feeling and went with 40 to 60 instead of 30 to 50. I don't. At this point, it's not looking like it's going to pay off, but I hope to be wrong. I hope to be really wrong because I'd rather be under on my volume prediction than over. Taking a look at the hour interval. More selling pressure than buying pressure. RSI at 36.76. On a 30-minute interval. It's real hard to say here. Maybe slightly higher. I don't know. It looks like buying pressure and selling pressure are about equal. RSI is definitely low at 32.7. It's already dipped below 30 twice in the last 2 hours. 5-minute interval. We had a crossover with more buying pressure than selling pressure 5 minutes ago. And an RSI of 42.61. So it's got plenty of room to move up. I mean, quite frankly, this just really looks like it's just a wedge that's about ready to break. Let's do a trend channel. Ooh, it's ever so slightly pointing at the bottom side of the. Yep, it's ever so slightly pointing at the bottom side of this wedge, which to me means it's going to break out going up. I'm still not 100% certain on how I feel about this trend analysis, but we'll see how it plays out over time. But we do have falling. I would say that we have falling price. Let me just verify that real quick here with that trend channel again. Nope, it's an ascending price. We have very slightly ascending, but if this goes back down and tests the lower side of this wedge here once more before breaking out, going up, it'll definitely be a falling trend channel. So it would be falling price with falling volume. Yep, definitely falling volume. All right, let's see what you guys are saying. I don't think we go below 40, or it would break the upward pattern. Globally, we are going to 53 with pullbacks. Today, first is the biggest. After 53, we go down to the 44, 46 area, and then to 60 plus, after which a cooling to the 40 level is possible. Those who have an average position value below 40 can relax. The probability of returning to these levels in the near future is extremely low, but remember about Mr. Manipulator. You got to throw in that clause in there, like, I could be wrong. I feel you, Bandera. I really feel you on that one, man. I feel the same way. It could do this, but it's you never know, right? Mr. Manipulator. It's about time for me to leave. Did you guys like the music last time when I went on break? If you did, then I'll keep it. If not, I'll move on to something different. Give you guys like 5 minutes to decide on that one. JP says yes, 53. I could see that one coming. All right, so we're having a test of this lower side of the wedge here. It'll be interesting to see what happens. We do have a 10,302 buy wall. I know people absolutely despise it when you call it that, because sometimes they get hit and they just disappear, and that's not actually what it ends up being. It's not a buy wall, but that's what I call it because, even though it may be a synthetic buy wall and it's just, to try and drop the price, it is still a wall. It's kind of like the Wile E. Coyote. It's only a wall when he doesn't want it to be a wall. I just envision like the Roadrunner, like him painting like that road that goes out into like nowhere, and like the Roadrunner just runs right across it, and then he goes running after it, and then like he's in the middle of the air, and then he like looks over and puts like that sign up that says like, "Oh no," or I don't know, he says something. just I love the Wile E. Coyote. See, the hard thing about wedges is that they're really difficult to predict which way it's going to break out. For the most part, for me, I try to look at volume. I try to look at price, how price is trending, and I also try to look at that trend channel as well. I draw out a trend channel in there and I kind of look at it. And if it's pointing, what seems to happen most often to me is whichever side it's pointing to, the trend is the opposite side of which way it breaks out. So, this could just be an extension. Like if the price does break out here in the next minute, it could just be an extension of the wedge. I normally will do 2 extensions of a wedge before I start looking for a larger, bigger pattern. But like I said, like I normally say, the candle actually has to make it outside the wedge, and so far it's not. But like I said, also, that's now a flat price. There's no upwards or downwards movement in price. And with that, guys, it's my break time. Interesting, Bondaro. I might have to consider that. That might, I mean, well, what's your reasoning behind that? Tell me what the reasoning behind that is, just out of curiosity. Why would you say that to be the case? And I'm open to learning, so I'm not going to go until I hear your response, because I don't want to just walk away from that. I am interested in what you have to say. I mean, because I mean, if you look, here's my problem. Here's my problem with that. I know there's a 20-second or more delay here, so it's going to take you a minute to respond. So I apologize if I'm talking over what you're writing. But the thing that I have a problem with that is that this is actual price action. Now it's not the large volume portion of the price action, but it did touch that price. Now if I were to have drawn the same wedge using just the let's do this. Let's do this. Let's draw the same exact pattern, but using the because you remember I'm using the wicks. So I'm touching now. I have to touch the points instead, the main bodies, like you're saying. So if I create another wedge in here, then I get something that looks like this. In which case, we already broke out of the wedge, right? Because this you gotta remember this body is equal to or lower than this piece here. So technically speaking, we broke out of this wedge here a while ago, but I don't really feel like that's the genuine price movement on where this is headed. That's just that's still part of consolidation right there. So based off of what you're saying, if I were to do what it is that you're saying, then I would have drawn what I would consider to be bad technical analysis on the minute. So by drawing them through with the actual price action that we had on the peaks, or the candle wicks as you referred to it as, which is what it's called, the price action stayed within the wedge the entire portion of movement, and it's looking to indicate the breakout where I'm saying. So I'm kind of curious why you would say not to use the candle wicks, because I think that that is actual price action, and it's important to acknowledge, right? For example, if we zoom back in on 7 a.m., and I know using pre-market is really, really bad, but if you were to have a body like this right here, you would need to include this price movement of $42.65 and $43. That's a big range, and it's important. That's important data. Both sides of that is important data. Just ignoring that data kind of skews your price trends. So I'm kind of curious. Anyways, I'm not seeing a response right now. I'm gonna go to break because I don't see. It's been longer than 30 seconds for sure. I'm almost positive. I'm gonna go to break. I look forward to reading what it is that you have to say when I get back. But I'm gonna take off as of right now so I can go grab something to eat real quick and then make sure I'm ready to go for when I come back. I'll see you guys back here at 11 o'clock, and we'll do our next technical analysis at that time. See you guys in just a bit. Yeah, that music was terrible. That was absolutely terrible. I don't know how you guys managed to sit through that and watch that price go down. That was absolutely terrible. Oh my gosh, I have to change that. Do I go to break again today? I'm changing that music. That is depressing music. Holy crap. You guys didn't say anything last hour. All right, synthetic price failure, you know, it's a possibility. It's definitely in the realm. 38.25. I'm going to go ahead and mark down the 40.01. That puts us down to 15.8% drop in price. Synthetic price failures start, or end, I should say, at 19.5%. If they are indeed getting people to sell shares during this period of time, they will continue to press the price downwards. They need these shares. They need them really bad, and they will continue to press the price downwards so long as they have sales coming through. It's called the mute button. That's funny. That is funny. So we did have a breakout going down here. I was anticipating a breakout going up. I was definitely outside of my box, but inside the wedge. Broke out down, tried to come back up to support at the very end there and broke out down for sure. I'm going to go ahead and delete this. Unfortunate. You guys crack me up. All right, we'll look at this, do a little technical analysis here in just a minute. Voice cracking. Let's take a look at the technical analysis. Let's go through everything and see where we stand, and then we'll come back and see if we can chart this out and figure out where we're going here. Bill's like, no, man, you don't understand. I got you muted too. I wouldn't blame you. Flashing you guys to the moon stickers. A little bit of subliminal messages coming your way. I got to take you guys to the other page. This beard, it's killing me. All right, taking you guys over to the other page, which is blinding you. There we go. Just got to update a few pages here. There we go. Updating Ortex, updating off exchange, and updating option chain. I think I'm gonna have to move the option chain just a tad just to make sure. Okay, still cooking right at 40. Okay. I think I'm going to leave it up here so you can see the 5,000 options that are open at 34 and 35. All right, let's take a look at everything here. Off exchange still reporting 53.65. I feel like that's where it was like an hour ago. Let me refresh it one more time just to make sure that it's accurate data. Okay, 53.65. Right about what it was an hour ago. Borrowed change 1.99. We are 1 million away from seeing probably some really good price movement. A return of 1.99 is going to decrease the estimated short share interest of the free float to 16.23%. Gosh dang it, this mustache is like tickling my nose like crazy. I was snorting lines. It's not true. I don't even know what that stuff looks like. Let's see here. Moving on to options. I can't even read what you guys are saying. I'm sure somebody's gonna say something funny. On the call options, the highest level strike price for volume is $50 still. It was 17.7 an hour ago. It is now up to 20.4. On the put side of things here, highest level of volume at a $40 strike price. It was the same thing an hour ago. It went from 8.1 thousand contracts to 11.1. So basically a 2-to-1 ratio, almost a 2-to-1 ratio, just slightly underneath 2-to-1. Monty, if you're still listening, Adam bowed out of doing a price prediction today, so your price prediction is going to be his price prediction. I will take, if anybody can't make a price prediction, I will take the first one that I see or remember as the price prediction for the day. All right. Taking a look at orders by Fidelity customers, AMC currently in 8th position with 57% buys to 43% sales. As we move down to that $40 range, just being underneath 40 would be, is going to start a lot of buying. So we'll probably start seeing that move up higher and higher. GME, I think they were 20. Was it 25th or 26th earlier? No, I'm sorry. I think they were 21st. I think they're in the same spot they were. I don't know. I forget. It's been too long now. But they have a really nice 68% to 32% buy over sell ratio on their trades, which is looking decent. Shares available to borrow. Still no new shares having been borrowed in the last hour. 19.4 thousand contracts are in the money on the calls. 92.5 thousand contracts are out of the money on the puts. This number's still high. Still too high. Taking a look at the rest of the market. NASDAQ is down 0.66%. Dow Jones is down 0.56%. The S&P 500 is down 0.49.5%. And decliners, 4,449 decliners to 2,724 advancers. Robinhood is down 2.82%. Amazon is up 2%. Looking beautiful, Amazon. Cinemark is down 0.92. Doge is down 3.17. GameStop is down 4.22, and we are down 10.59%. SSR has triggered for the day today. We currently have a 7-point spread with more outflow than inflow, with our 10.5% down. And let's see here. Okay, I'm getting 48.5 million share pace. We did have a run up in volume a little bit here as the price was running down. But we are on a 48.5 million share pace day for the day today. I really should have stuck to my guns. I have a feeling I'm going to be off. I predicted 40 to 60 million shares traded for the day today. I'm really wishing I had done 30 to 50, which is what I really initially wanted to do. But I wanted to try to catch the upside of a possible run in the later half of today. And I think I'm going to end up regretting it. That's all right. On a 1-hour interval. More selling pressure than buying. Oh, wait a minute. Hold on a second here. It looks like it might be about even. Selling pressure and buying pressure. RSI at 32.44, so this could be a reversal. This could be indicating a reversal coming our direction. On a 30-minute interval, we have more selling pressure than buying pressure with an RSI of 27.16, definitely oversold. We have a double. We have actually 3 dips down into underneath 30, with 2 times where we've risen above 30. There's a term for that, and I forget what it's called. That's why I said it the way I did. On a 5-minute interval, it looks to me like we have just slightly more selling pressure than buying pressure. Again, with low RSI at 33.33. So I would expect to see some upwards movement. If they do continue to try to drive the price down, it's going to be costly. They're probably going to run into a lot of buying support. Anything below 40. Buying pressure. That's probably what I meant. Where are we heading? Let me go back out a little bit further here, guys. I think we're just kind of consolidating into this wedge pattern here on the 30-minute. I'm pretty sure I created this wedge because it's pretty far out there on the daily. So if I come back out to the daily and I look at it, and I actually really kind of despise this wedge. I don't like how even I drew it, but we're still kind of trending inside this wedge. The breakout of this, could start as early as tomorrow, and maybe as late as the 30th of this month. But I am expecting a breakout going up. I don't even remember how long ago I drew that. I want to give us like some kind of idea on where we're heading right now. Let me see what you guys are writing here. An example in numbers for a fictional Ivan who has 800 shares. Oh, okay. All I'm going to say to that, guys, is that really unpopular moment here. All right, really super unpopular moment to talk about this. But I've got to say it like I see it. You need to be aware of some things when you day trade AMC. There are things that you need to remember about day trading. If you're not familiar with this, then you need to know. You need to go up and look up free ride violations. Check that out, because I want you to be aware about what it is that you could miss out on. Because if you decided to day trade this stock and you decided to buy back in, let's say you sold at some point and you decided to buy back in and your shares have not what's the word I'm looking for? Settled. If they have not settled in the correct amount, if it hasn't been the 2 days settlement time, and you try to buy back in, you're going to get stuck. You're going to get stuck, and you're going to miss out with whatever money you have outside of trading. Having said that, yeah, thank you, Eric. Settled. Believe it or not, the 30 second grace period there. I actually just now saw it, but I actually said it 30 seconds ago. What you need to understand is this. I consider you to be, provided that you're not taking, if you're not skimming off the top and setting funds aside, then I consider what you're doing to be what I would consider to be like the Navy SEALs. You're trying to steal shares away from hedge funds from the market. However, if you're skimming off the top and you're pocketing money, then you're screwing everybody. You're taking your money in advance. So keep that in mind. Number one. Number two, the first people to die in a war are the guys on the front lines, the Navy SEALs. Those are usually the first guys to die. You're going to get caught. I guarantee you 100% you're going to get caught in a situation where you're trying to day trade this stock and it's going to pop off on you so fast and so hard that you will not be able to get back in enough time. You will lose out. Be careful. Very unpopular moment. I know you may not agree with what I'm saying, and I'm okay with that. It's okay for me to disagree with you and still be friends. We can all be friends here. But I'm telling you what I'm worrying about, and I got to be honest with you, because you can get yourself into a lot of trouble. You have a once-in-a-lifetime opportunity, and this is something you've probably never been in or experienced ever before. And if you go and you look at the data for GME and how it popped off, when it popped off, you're going to get stuck. At some point, you're going to get stuck. So consider that. Keep that in mind. Bill, I agree with what you're saying if they're doing those two things. If they're skimming off the top, they're delaying it. Or if they're collecting money and putting it to the side. The other part to that is that if they're because Bill, I mean, you got to know there's day traders out there everywhere, right? It doesn't matter if you're an ape or you're not an ape. We all know that there's day traders, and it doesn't matter if you're an ape or you're not an ape. They're going to be day trading AMC 100%. I mean, if we pull up an Ishimoto cloud and look at it, there's definitely times in here where there's been signals for people to be able to buy and have positions. So they're not, if they may be delaying it to some extent, but if you're trying to ride AMC, here's the difference. The day trader who just hits and runs on AMC, they're not going to be the ones who care if they miss out on a MOASS. They don't care about that kind of stuff. If you're here for the MOASS and you're day trading this stock, there's going to come a point in time to where you're going to run into a situation where you're going to get stuck. It may not be today, it may not be tomorrow, but there will come a time where you're going to get stuck and you're going to be out your position, and all the money that you may have made in the beginning won't make up for how much you miss out on later. So just keep that in mind, because it's important to know. So I'm not going to go further into this. I just want to throw that out there. You need to be careful. Like I said, Navy SEALs die first. The guys on the front lines die first. So, yeah, just keep it in mind. Eventually, yes. Eventually, yes, MCon. There will be, I mean, I'm not saying it right now, but eventually down the road, there's going to be a price movement where, it's going to go down, it's going to go up really, really fast. The people who are doing this day trading are going to sell when it gets to the top, and it's going to go down really, really quick. And they won't be able to buy back in for 2 days. And 2 days, go back and look at GME, guys. So look what happened in 2 days' time. Look at what happened to the price over 2 days' time, and sit there and tell me that you think you can get back into it. All you got to do is go back to the 25th and look at the 25th to the 27th, right? And I can tell you right now that you're gonna get stuck, and you will lose out. Whatever position that you have outside of AMC will be lost to the upwards momentum and price, and you won't ever be able to get back in quick enough. And it's gonna suck. It's gonna really suck for you because you're gonna be sold out at that time. You're gonna be sold out, and you won't be able to get back in. I'm saying if you're a true ape, if you're just here to hit and run on AMC, you're probably you're a day trader. You're just going to hit and run on AMC, then you're probably making what you would expect to make. But don't expect to make the MOASS money because you're not going to. You can't possibly trade fast enough because of the regulations and the restrictions that your brokers have on you as a trader that will keep you from and prevent you from being able to make that kind of money. It's the way it works. And it's not my rules. It's not my rules. It's your broker's rules. No, Ali, it's one. It's one. One violation of free riding is all you get. And then you get put on a 90-day restriction. One violation. And here's the other part to it, Ali. If you try to use your one violation and it's over a certain amount of money, I almost guarantee you that when you go back to try and trade back in, they're not going to let you do it. There's no way, right? Because you're talking about very large amounts of money, super, super large amounts of money, and they're not just going to front you up very large amounts of money. But what you're talking about, there's actually another violation that you're talking about, and it's not coming to my mind off the top of my head. There is another violation that you get 3 of, and I don't remember what it's called. Give me a second, and I'll pull it up. And you may not even know that you're getting these violations. In fact, if you're day trading AMC, I almost guarantee you that you probably have those violations right now, like probably a couple of them, and you don't even know it. And if you hit that third one, you're screwed. You're out of the game. Let me see here. So all I typed in was trading violations. There's good faith. That's what it is. Good faith violation. And I'm not 100% certain on this, so don't quote me on this, but I think that it may be different from one broker to the other. I'm not 100% certain on that, so don't quote me on that. But so when I sit there and I tell you a free riding violation, it's 1 for my broker, is 3 for the good faith violation. There's a cash liquidation violation. So go check those out and understand what they mean, because if you have no idea what that means and you're trying to day trade a stock, especially that's going to go huge amounts up in price, you're going to get screwed. You're going to get screwed. So go check it out. Yes, Ali, that's correct. The good faith, I'm pretty sure the good faith violation's 3. The freeloading's 1, and I wasn't aware of the cash liquidation violation. So I'm not sure. I'd actually have to read over this rule. if you incur 3 cash liquidation violations in a 12-month period in a cash account, your brokerage firm will restrict your account. This means you will only be able to buy securities if you have sufficient settled cash in the account prior to placing a trade. The restrictions will be effective for 90 calendar days. The way the cash liquidation violation reads, it reads very similarly to a good faith violation, so I'm kind of confused what the difference is. Or, I'm sorry, it reads very much like a free ride violation. I'm sorry, I said the wrong one. And guys, and apes, I'm only telling you this stuff because I'm trying to look out for you. You know, I wouldn't be telling you these things because I'm trying to convince you to do one thing or another. You know, I want you to be as successful as you possibly can. I want us to be as most successful as we possibly can. And so I'm not saying any of this out of mal. Um, I'm not trying to be mean or grumpy or whatever. I'm just trying to tell you. I'm trying to look out for you. So I'll stop that topic. Malice. Thank you, Eric. I said Mal. I did mean malice. Well, excuse me. I'm trying to come up with an idea as to where we're headed exactly. And to be honest, it looks like a massive descending parallel channel. Man, I've got some indigestion. No, it's not. Oh, that's what I was going to draw. I feel like this is. I feel like that's potentially accurate. So let's see. Price is decreasing. We have what appears to me to be a descending parallel channel. We've got at least it looks like maybe 4 or 5 touch points here at the top side. We've got one point here where I'm just going to kind of ignore it a little bit and say that, that was just. I'd say we have at least 2 touch points and a possible third here. So it's kind of looking like a descending parallel channel. And I actually can't count this point right here because it's outside of the pattern formation. So really the pattern formation started right here at about 10 o'clock this morning, my time. Well, wait, Eastern Standard Time, and has continued down the chain here. This should be a bullish move. However, if there is a larger, bigger picture that we're not seeing, it will break out going down. So that's in that case when and if it does break out of this descending parallel channel, I would zoom out and try to look for something that's a larger pattern. The slinky going downstairs pattern. I like that. It's good imagery. I forgot to tell you guys. I saved the picture. I didn't save it yet, but I still have the picture from yesterday when you all asked me to draw a gorilla. I still have it here, and I was thinking, like, you know what? I'm gonna save this thing. I know it's a monstrosity, but I guess kind of one of the things that made me think of the most, more than more than anything, was if you give this guy a little bit of a, hey, why aren't you working? Let me erase that. If you give this guy just a little bit of a kind of a beard, like a scraggly beard in here, it's me. It's me. I didn't even realize that I was getting ready to erase it, and I was like, oh my gosh, I drew a self portrait. Here, I'll draw an ape. It's me. So I'm gonna save it. I'm actually gonna create a folder inside my AMC folder called NFTs, and I'm gonna make some trampolines. Maybe a Gary Gensler, good old Gazer Beam Gary. The fun stuff. Release it as an NFT. Exactly, Bill. Exactly. I don't even know how to do that, but it would be funny. Yeah, new folder. Let's see here. Folder. I'm gonna call the folder NFT. Who knows? Who knows? You never know. I'm gonna call this one drawn ape. It's me. Me, or how about just me ape? Me ape. There we go. Me ape. Ooh. I wonder if it matters what kind of image you save it as. Picture saved. There it is in my folder. Okay, breakout going down on a descending parallel channel should not happen. So let's look for a bigger picture here. Bigger picture. I mean, I feel like this looks like a head and shoulder pattern, but it's like one of the crappiest head and shoulders. It's just there's no. I mean, it's our classic devil horn / head and shoulder pattern where you have price decreasing for a little while. But I mean, we should have found support somewhere around, like, I don't know, $41, or maybe even, I don't know, $40. But it's still continuing to go down. I would suggest that this is, I mean, this really just feels like this is really looking a lot like a synthetic price failure. 47.50 down to 38.25. And the way that it's driving down hard, because it transversed, that's not the right way to say it, because it traversed through the $40 to $45 range completely, then what I would say is that, that's if that's kind of like an identifier to you about how dangerous that $40 to $45 range is for us. I mean, that's a perfect example. I mean, it's danger zone, super danger zone. So seeing this get down to 38.25, we're going to find out how many, we're going to get a good example of, if this gets down to 38.25, how many people sold. Because we will see it. If it gets below 38.25, no, sorry. If it gets to the red line, if it gets to 37.28, that's a very good indicator that you had paper hands on the way down. So that's what we got to hit, is the red line. The blue line is just a natural synthetic price failure where they try to drop the price on us. I don't see any really good indicators other than that, other than the fact that we're still within the day wedge that I have drawn out, which I absolutely hate. But we're well within those numbers. In fact, the bottom on this is well below even the red line. So we're still in the pattern. I haven't been reading everything you guys are writing. I'm sorry. Yeah, it broke it. It broke the descending parallel channel, Stockmaster, which, in my opinion, like 90% of the time, when we see it breaking upwards on an ascending parallel channel, it means that there's a bigger outlying pattern formation that has to be completed. So you break out of a descending parallel channel downwards. That's unnatural. It's unnatural price movement, which means to me that there's a larger pattern formation occurring, or price manipulation, or, and I hate to say this, people selling shares. That's always a possibility too. Now let's actually look at that. Let's look at 1 hour. This is going to get kind of messy here for a second, but let's look at the Ishimoto cloud. Let's see what the day traders are doing. Because I can tell you right now that the Ishimoto cloud will tell you what their intentions are. So if you take a look at the Ishimoto cloud, they typically trade this pattern for day trading off of the 1 hour and 4 hour intervals. And so what you can see here is that there was a good buy signal, a very, very strong buy signal. Let's see, this is Friday. Friday it broke above the cloud, was above both the base and the conversion. Conversion was above the base. Everything looked really good on Friday to buy. So you probably had a lot of day traders getting in on this buy signal here on Friday. Now, trading continued on. Then in the pre-market hours of Monday, you have your first indicator where the price runs into the conversion line that tells you that it might be a good time to sell. That's just your first indicator. That doesn't necessarily mean that they're going to sell at that point. They might kind of ride it out a little bit until they see the next indicator, which is when either the conversion line breaks across the base, or the trailing lagging line runs into the price. 1, 2, 3. So this lagging line wouldn't have ran into the price until just today. So that wouldn't have been a selling indicator. The first indicator to me that looks like it would have occurred would have been this one right here. Second really good indicator would have happened right about here. So it just depends on when they sold their shares. They may have sold them, maybe on the downswing, like if they didn't have an indicator, but it's, price started dropping again. So you have a breakout above the conversion line, and then you have it coming back into it. This might have been where they would start selling, because it hit it the first time and stayed above it, and then again hit it again here, and so they might have sold off. They're selling off at this point right here. That would have been a good point. On a 4 hour chart, let's see how it looks there. On a 4 hour chart, The day traders would have probably looked at a good buying signal again on Friday, above the cloud, above the conversion on Friday. Looks good. Everything looks great here. First indicator to sell. Price stays above it. Second indicator right here, triggering. They probably would have started selling last night. So day traders are probably causing a lot of what you're seeing. Price, if there are selling points happening right now, then more than likely day traders, we're seeing a dip from day traders. I very strongly believe that. I could be on board with that statement. So if that's the case, if the hedge funds see a point of weakness, right? If they can drive the price down to a point to where they can get weakness to to get people to sell shares. It doesn't matter who it is. If they can get anybody to sell shares, they'll take advantage of it. So here you have price dropping. This is pretty hard right here. I would almost say for certain that there was probably some paper. If we get down to that red line, I would say this would be one of the points, and possibly also in the aftermarket hours yesterday. Oh, this is ought to be good. Why AMC shares are falling. AMC Entertainment Holding Incorporated shares are trading lower despite the company reporting better than expected third quarter adjusted EPS and sales results. Getting a text here. Hold on a second. Let's see what they got to say here. I'm gonna pull it up on another screen over here. They've changed the format. I can't apparently open this now. I have to install something. AMC reported quarterly losses of 44 cents per share, which beat the analyst consensus estimates of a loss of 53 cents per share. AMC also reported quarterly sales of 755.6 million. Let me get to the good stuff. Why are they saying why this is? They're not. So they say why AMC shares are falling, but they don't really give a. I mean, other than the fact that they're saying that we lost 44 cents per share, which was less than what the analysts were expecting. If that's what they're insinuating, then yeah, whatever. Sure. Meanwhile, Robinhood over there has loses a security breach and loses tons of their investors' information to the general just who knows where in a data breach, and their price rockets up yesterday. Let's see what we got going here in the news. Oh yeah, look at this. This is how they're trying to hit us now. they're trying to insinuate that that retail is going to cash out now. The media is literally saying that retail is gonna dump because of the positive earning reports were done. Oh geez, the attacks. That's I can just see that. Retail's happy that they saved AMC, so they're quitting. Good, good fake news. Oh, it does. Bandaro, the whole market is crap today. I mean, yeah, you're not wrong there. I mean, look at it. 4,400. I got to refresh it. 4,349 decliners to 2,827. I've seen worse, in the last couple months that I've been covering this on a daily basis. I've definitely seen worse, but yeah, I mean, the whole market's on fire right now. If I sit here long enough and let this update down here at the bottom, you're just going to see a mountain full of red. Let's just sit here for just a second. I kind of want to see it all turn red. It's fun to see. It takes about like 15 or 20 seconds. I don't understand why it takes so long for the heat map to update. I guess it has to maybe pull the pricing on every single one of those stocks that are listed there, but it should change in a minute here. It is definitely taking longer than usual. So are they only putting up the stocks that are actually doing well? This must be like, I mean, considering the fact that like, 2/3 of the entire market's on fire right now, and like this heat map doesn't show that or reflect that whatsoever, is funny. I guess it's not going to change. Well, I know Amazon's up, so it must be accurate. They're just listing in the heat map like all the good ones. Okay, we're approaching the 38.25 mark. Synthetic price failure almost activated. The good news is, though, about these synthetic price failures is that once we bounce off, depending on how hard we bounce off this 38.25, what you could potentially see happening is a massive drive upwards. But it just kind of depends on how much resistance they have getting down there. If they don't get a whole lot of bleed off of shares getting down to that 38.25, if they find too much support on the way down, then it might just barely touch it and then shoot up. Or if they don't have resistance and it's fairly easy to drive the price down there, then what you'll see that test for 37.28. And then it'll kind of hover. It'll do a couple bounces off of that 37.28 range, maybe drive back up some, come back down, test 38.25, and then shoot back up. But my wife was just saying this morning. She goes, "Is there ever a time where you ever feel like taking a day off?" I think she was trying to hint she wants to do something. But, I told her, I said, well, yeah, I'm sure, I've always thought about taking a day off here or there, but, I never know what's going to happen. So I only want to do it on the days where it feels like it's going to be like a nothing day. it never, it never really feels like that. It's always one way or the other. There's no just nothing. Like if it was just going to do this right here all day long, yeah, I've done it before. I've walked off the show before and said, guys, it's not happening today. There's just nothing going on. It's dead. It's not going anywhere. I'll see you. I'll see you at market close. Then I go do something. And it doesn't bother me, guys. If you guys all take off because you need to keep your mind in a good place, take off. Do something else. Keep your mind occupied and healthy with good things that make you strong. Don't let this erode you. I'll still be here. I'll still be here when you come back. If you come back. I mean, right? I mean, you don't have to come back here. You can go anywhere you want. Let's see here. Let me see what's being said on Reddit. I am curious. We got about 5 more minutes before we do the next technical analysis. A lot of sarcasm. Definitely a lot of sarcasm. No shorts November. I was in a space call last night. I don't even remember how it happened exactly, but we talked about uh, why is underwear necessary? And that somebody brought up the same thing. They said there should be no shorts November. And then I said something to the fact of, well, I'm sure glad that Adam Aaron didn't have his interview with Trey when it was no shorts November, because man, that camera falling could have been really nasty. Any serious post on Reddit quickly turns into bathroom humor. It didn't used to be that way though, Bill. It didn't used to be that way. It used to be. I mean, I left Facebook for Reddit because I was sick and tired of Facebook. Um, it just got. I felt like Facebook got real toxic, and then I felt like the people on Reddit just there was so many smart people on there, and just the humor was very intellectual humor. So it wasn't always just bathroom humor. I think it's gotten more popular and gone more downhill. But Dr. Drake saying this doesn't bother me. I've watched 12 million evaporate from my book of business in 2.5 weeks during the start of the pandemic. Held on all of that, and it came back double. That's an awesome story, Drake. Sorry, Doctor. That's an awesome story, Doctor. Um, I think one of the worst, I want to say one of my worst mistakes that I ever made was when the market crashed in 2001. I was a new investor. I had started investing in 1998. Yeah, 90. I think it was 98. Yeah, 98. And in 2001, I had made a small nest egg. I don't even want to say a nest egg. I had made some. I had made some significant monies in home building stocks, and then the market crashed, and I was really green to trading, um, and I lost. I want to say like maybe 2/3 of my money in a couple of days, and I sold. I sold because I wanted to move my money to a safer position, and I sold. And worst mistake I probably ever made. I should have just left it. I should have just left it. I would have had so much more money. Um, but by far one of the biggest, hardest lessons I had to learn when I first started trading. And I should have just held. Of course, for every person who has a I should have just held story, there's a person out there that should have said I should have just sold. So there is the other side to that coin as well. It was a good investment. It was home building. It was a home builder, and they were doing really well at the time. Super well. Actually, I take that back. It wasn't. It was a fund. It was a fund that invested in home builders, and the fund was doing really well. So as you can imagine, because it was a fund, it took me 2 days. So when I initiated my sell order, it took 2 days for it to go through, or a day and a half, or however long it took, and the price, at the time when I sold, I think I had only lost like a third, and it ended up losing a second third by the time the transaction was completed. So it was nasty. But I was up. Um, 49% or something like that for the previous year, and I was already up like 30 something percent for that year. I was making good money, really good money, and at least I felt like it was good, and a lot of people that I was talking to at the time, and I think, knowing what I know now, returns like that year over year are pretty amazing returns. So that's why I laugh. I laugh when people are, they're here in AMC. The very first question I ask is, "How long have you been in AMC?" And they say 6 months, and I go like, "Oh, so you're up 300% right now, and you care about how long this is going to take to squeeze? Really? Like, I mean, it's unheard of." So I don't know. Yes, Bondaro, 100%. I will. I would extremely hesitate for myself to be placing my money back into the market after the squeeze, because I think that a squeeze of this potential size will be a market crasher. And I do believe that it's going to be probably, I don't know, somewhere between half a decade to a decade long bearish run. Maybe more. And I hate to say this. I hate to be. Hold on a second. All right, tinfoil hat time. You know what it is. Al Borland's in the house. When the market crashes, if we go on a 5 to 10 year run, one of the only things that will probably bring us out of that is war. And I hate to say this. I don't. I'm not trying to throw fear and uncertainty and doubt out there, but we know that when we have huge market crashes, usually what follows that is war. That's one of the best things that brings us out of a market crash. History repeats itself. It has an amazing way of repeating itself. Go back in history, back to the 1919s, 1900s, early 1900s. look when the last pandemic was, then look when the next market crash was, and then go look and see when the next world war was. Go and look at those dates and see if you kind of come up with a correlation of what could be our future. History has an amazing way of repeating itself. It really does. And when I and when I wrote wrote the article the other day for, did I post that in the top today? I think I did. Yes, I did. When I wrote the MOASS checklist, one of the quotes that I put in the checklist was a really powerful quote. I'd never heard it before, by Samuel Taylor Coleridge. And I said, I started this section off with "History will repeat itself." And I love this quote because most everybody says, like, there's a really famous quote that everybody uses, like, I forget what it is, but this one was different. It says, "If men could learn from history what lessons it might teach us." What lessons it might teach us is what it says. "But passion and party blinds our eyes, and the light which experience gives us is a lantern on the stern which shines only on the waves behind." That's so powerful. So powerful. I love that. I love that quote. I think it's an amazing quote. All right, it's time for technical analysis. But when we're all millionaires, we can afford to put bunkers in our backyards. Yeah, and but this Al Borland right here is not going to help you build one because I don't know how to build one of those. I don't know. It's funny. I've kind of in my private circle of admins, and JP, and I know you're not in on this because you're kind of one of the newer admins, but in my private circle of admins, we've talked about some of the things that we're seeing right now. You have to realize that I'm in contact with a lot of you viewers, and a lot of you viewers have different walks of life. Some of you are managers for companies, some of you are IT people, some of you are just different walks of life. And I'm getting a lot of information from a lot of different people that's telling me about some very strange activity in the retail world. And it's concerning, very concerning. So I was asked one day by one of the admins, they said, "What are you doing to prepare?" And I said, "Are you?" Because I actually asked him. I asked him first. I said, "What are you doing to prepare?" And he said, "Well, probably not enough." And then, he of course asked me what I was doing to prepare, and I said, "Are you kidding? I asked you so I could come to your house." So, so yeah. So those of you who are on the channel right now listening, if you've got one of those bunkers in your backyards, let me know. Hit me up. I'm coming to your place. We're gonna crash. I'll be bringing along 5 or 6 people with me, just so you know. You can prepare in advance. Anyways, moving on to the technical analysis. Let's do it. Pretty sure Fidelity is going to give me a problem right now and say, like, "Nope, I already logged you out." But let's see what happens here. Nope, they didn't. Surprise, surprise. I had to put on the jacket. I had to. I mean, if I'm gonna start getting all tinfoil hatish on you guys, I got to put the jacket on. That way you know what's coming. You can tune it out. As you said, the volume button. All right, I'm going to update Ortex. Oh, guys, look at the number. Borrow change 2.92. Ooh, it's so close. It is so close. $2.92. It's so close. Updating off exchange. I swear I'm just going to start calling this up. Uh-oh. Off exchange is down. Chain. I need to reply to somebody real quick here, guys. Give me just 1 second. Okay. Off exchange currently at 54.6%, 2.92 returned shares. Remember, the magic number is 3. 2.92. That's a million more. It was 1.99 an hour ago. 2.92 million shares. And see, this would be in agreement with me with what I'm saying as far as like, there's definitely people who are selling shares back to the market as it stands right now. Because as you sell shares back to the market, it allows them to cover their positions and it gives them return shares, reducing the amount of on loan shares that they have, which is bad. It's not great, but it is what it is. Nothing that we haven't seen before. Estimated current short share interest of the free float is going to be lowered because of this, down to 16.08%. Let's see, call options. At a $50 strike price, it's gone from 20.4 thousand contracts to 23.8. And on the put side of things, the highest level of volume currently still at $40 strike price, and it's gone from 11.1 to 13.7. Taking a look at orders by Fidelity customers, AMC currently in 8th with 59 to 41% buy over sell ratio. So buying is definitely picking up because we're underneath that $40 price range, and we're seeing probably a lot of support picking up now. There's going to be people who are in this long who are starting to buy. Moving down the list, I think it was 21st was where GME was earlier. It's now in 20th. With 68% buys to 32% sales. Really good numbers. Looking much stronger for GME. Shares borrowed in the last hour still up. Looks like they borrowed 100K. Yep, 100 shares borrowed in the last hour. They're now up to 3.1 million shares borrowed for the day today. 3.4 is what they borrowed yesterday. 11.6 thousand contracts in the money on the calls. There is more puts in the money than there is calls, and there is less out of the money puts than there is out of the money calls. Do you see? This is where I'm telling you guys, like, we got to be really careful with these options. We can really get hammered quick on these. Next week's looking really strong. There's a lot of options there, but there's a lot of them out of the money on both sides. Taking a look at the rest of the market. NASDAQ is down 0.58%. Dow Jones is down 0.44%. S&P 500 is down 0.42%. 4,195 decliners to 2,984. It looks like the markets might be picking back up a little bit. There's a few more advancers than there has been in the last hour. Robinhood is down 2.78%. Amazon is up 2.82%, which is quite a bit. Cinemark is breaking even. Doge is 2.11 down. GME is down 5.23. We are down 12.02. And looking at the inflow versus outflow, there is currently a 27-point spread between the two. I think my math is right on that. 25, 24 plus 3. Yeah. 27-point spread, so more outflow than inflow. Now that's starting to look a little more accurate. 27 points equaling 12%. I would think it'd be more than that. I'd be thinking like a 50-point spread at a minimum. 26.16. Let's see, we're 30 minutes past the half. So 225. We are currently on pace to hit 45.3 million shares traded for the day today. My prediction is 40 to 60 million shares traded. It's getting real close. I have a feeling I'm not going to make it, but it is what it is. I took a risk and went big. On a 1 hour interval. On a 1 hour interval, we currently have more selling pressure than buying pressure with an RSI super low at 29.57. That's not super. It's low. It's out. it's below 30. It's definitely signaling that there should be a change in price movement, but I'm not seeing it reflected in Vortex Index, Vortex Indicator yet. Is it Vortex? I don't know why. All of a sudden I had a brain fart on that. I can't remember if it's Vortex Indicator or Vortex Index. I think it's Vortex Indicator. Oh, Vortex Index Indicator. VI. It's Vortex Indicator. I don't know why I wanted to say Index. Just popped into my head, I guess. Vortex Indicator is showing still more selling pressure though. So maybe we'll see this flip over here in the next hour. On a 30-minute interval, more selling pressure than buying pressure with RSI super low again at 26.06. It feels to me like, based on these numbers that I'm seeing, that we're nearing the bottom. On a 5-minute interval, more selling pressure than buying pressure with RSI at 32.45. It was definitely dipped below well under 30 and is now above it and looking like it wants to return back underneath that 30% threshold. So what we have here appears to be a very clear another descending parallel channel. Let me go ahead and draw it out. And I would suggest this should break out going up. I would hate to have it happen like right now, but, well, actually, the sooner the better, right? But yeah, just because of the fact that I just drew it kind of sucks, because it's like, oh yeah, look here, it's gonna break out, and then it breaks out. Kind of stupid looking. Kyle, watching your streams for the last few weeks now, respect your TA and conviction to AMC. Before the big run up in May, we dropped about 15% from 14 to 12. This feels a bit similar in my opinion. Kyle, welcome to the channel, man. You're lurking a little bit around here. And I'm okay with that. I do that too. I go on space calls sometimes, and I go into channels and I watch people and listen to. Well, I guess I listen to people, and I just like to hear what people have to say sometimes. Thanks, I appreciate that. That 15% in May that we dropped down before the big move up. Let's go back and take a look at that for just a second, because I do want to see what it is that you're talking about here. Let's move back. Actually, I wouldn't have a 15% recording in my. I don't think I would have. Oh, maybe I did record it. Hold on a second here. Oh, I did record it. Would it by chance have been 5? Oh, maybe I didn't record it. I see just 20%ers. So I only recorded 20% dips, and there was a couple of them in May. There was one between the 17th and the 21st, which was a 24.1% dip. Then on the 28th alone, we had a 23.3% dip. Actually, twice on the 28th of May, we had two dips. One was 23.3 and the other one was 22.7. And the price run up between those was only 12.5%. But we were moving pretty good in price at that point. So I think you might be talking about the one from the 17th to the 21st. So let me go back there and check that. 17th through the 21st. I'm going to pull it up on Tradingview. Let's see, 15 minutes. Hold on a second here. Had to respond to a text. What do I got up on the screen here? Nothing? Let me give you guys something to look at. Hey, it's me. I know, that's funny to me. Probably not so much to you. Let's see here. If I had to guess, Kyle, the time frame. Now, what did I just say? I just got done telling you that the 24.1% dip in price was on from the 17th to the 21st. And if I look at that, it was actually the aftermarket hours of the 17th. So, funny you should say. So I'm going to drag this over here. Let's see. Let's go back out to the 5-minute. Let's see if I can drag this out here just enough to where you guys can see this. I knew it was going to do that to me. All right, cool. Oh, no. All right, well, we'll just look at it like this. Actually, I got a better idea. Watch this. We're going to screen copy this. Then I'm going to drag this over. All right, so what you're looking at right here is the 17th. This is what he's talking about right here, guys. On the 17th, in the aftermarket hours, the price ran up and then dropped really, really hard in the pre-market of the next day on the 18th. And the price stayed that way all the way up until the 21st, which is where it ended up, I believe, hitting its low before running up. Now, if I take that other picture that I just copied and pasted over and kind of show you over here, you know, you could kind of, actually, I know a better way to do this. Let's just take our current price movement. I'm going to try and let's see if I can zoom in on this real quick here. Where's my arrow? There it is. Let's take our current price movement and just this last phase right here. Right, we're actually going to go backwards with this. Most everybody copies the past data and posts it to the current. Let's just take our current data and post it to the past. And I'm specifically just going to copy the devil horns and the head and shoulders pattern here. And then I'm going to zoom back out here, and we're going to take this. We're going to take our current price action, that devil horn and head and shoulder pattern, and we're going to come back down here back to the June run up, and yeah. So, you know, I want to confirm for what it is that you're seeing here, that it's very, very plausible that the price action that we're having right now is very, very similar to what it was that we saw last May and June. It's just different timing and scaling, right? You just got to kind of get the pattern to fit just right. And it doesn't. It never just fits just perfectly. It's just always slightly off. But yeah, same exact kind of deal, right? You can see the formation happening. If I get this portion of this to line up, You can see the stair-stepping action. Same kind of deal there. So what we might end up seeing is kind of just a lot of sideways movement over the next couple days. But it's hard for me to say for how long, because I think the scaling is the problem, right? I mean, there's obviously scaling issues here that aren't the same, because I just took same time interval, our current data, posted it to the past, and there's scaling problems. I can't shrink this to get it to fit perfectly, but you can see what's coming up for our future. And by the way, Kyle, welcome to the channel. But you're right though. It was more than a 15%. It was more than a 15% drop in price. It was actually, I record this. I'm recording this because when I sit here and I talk to you guys about synthetic price failures, I recorded that one because it was a 24.1% drop in price. Synthetic price failures happen. They happen. They are very repeatedly used by hedge funds to discourage investors from holding the stock. And so that's why I draw out these lines down here and tell you that, look, in order for us to get down to the levels that indicate a synthetic price failure is happening, you have to get to these numbers. It may not get there. It may not get there, but for sure it's a synthetic price failure when it gets down to that number. And if it gets down to 37.28, then there's some people that sold, and it happens. Not a biggie. We'll make it. Exactly. I couldn't agree more, Kyle. You got your head in the right place. Patience is key. It really is key here. I don't know how long you've been in holding for this, but if you've been in for 6 months, you're up 300%. Well, maybe not now, but you're still up a lot. More than you probably would be with any other stock that you would have traded in the past. So yeah, if we go back to Market Watch, I keep saying Market Watch and I say the wrong thing. Let me go back to that. I'm going to pull up volume during those periods of time just because I want to show you what volume looked like back then. And I'm having problems. I'm going to have to get AP on here to talk with me, but some of the volume. Some of the volume charting that I'm getting on here is just absolutely horrific. So check this out. Let me get rid of that. All right, so this is that same chart that I showed you guys. Look at the volume down here. Going into the next phase, if price starts to flatten out, remember this is where we're at right now. This is our current state. As price flattens out and kind of moves sideways, we're looking at multiple days of very low volume before it starts to spike. I don't know how long that's going to be, obviously due to the scaling issue, but yeah, there's going to be some decreasing in volume going on, and I can further attest to this. Looking at the suck, squeeze, bang, blow. If we pull this back up over here and I blind you without warning you first, I apologize, but price, you know, the number one rule for this is price is supposed to remain relatively the same. We hit 40. I didn't even up. Oh yeah, I did. This is updated. 4506. It was the top end. We hit a super high top end on this. I really felt like that was not 4506 was too high. It's not relatively close to the same price that we entered into the bang phase. 3476 wasn't, but we had a correction. We drove down to 3476. We had a correction the other way, so it was like an oscillating value, right? We had too much down pressure. It rose really fast. We did have an increase in volume during that period of time, but it wasn't exactly the below phase. And the other part of the rule of this is that volume is supposed to be decreasing. So I think what happened is we had significant market manipulation that occurred on probably right around like maybe the 26th or 29th, to where they really drove the price down, you know, during that period of time, and then they let it go. They released, and so you couldn't help but have upwards movement in volume. But in order for us to get to the next phase of the cycle, is that we need to have decreasing volume. We need to see decreasing volume and relatively close to where we entered into the bang phase on the 14th. Price on the 14th, $40.07. Expect price to remain relatively close. What do I feel is relative? Probably about $3, plus or minus $3. So expect volume to start drying up, and we just kind of, in general, stay close to $40. That's probably what's going to happen until we hit the blow, and then it's going to take off. So yeah, I agree. Thanks for joining us, Kyle. Don't let Kenny kill you, or whoever kills. They kill Kenny, or I don't know. Don't kill Kenny. Oh yeah, 988. You're chilling, man. You're doing great. It's all downhill for you. No, I don't think so, Eric. I don't expect a couple more weeks. I mean, no. I really don't expect it to be that long. I think one of the hold on a second, guys. I got a knock on the door here. Oh man, that was funny. So the guy was trying to advertise to me as a solicitor. My dog ran up and started barking, and he tried to hand me something. I used to do. I'm not proud of this, guys, but I'm gonna go ahead and admit it. I used to do door-to-door sales. It was a very brief period of time in my life, super brief. But yeah, I thought I was getting into something I didn't know what I was getting into. Anyways, having said that, he tried to hand me something, and if a door-to-door salesman ever tries to hand you something, just refuse. Say no. But I think he saw my vest, he saw the dog barking, and just decided that it was better to just leave me alone because I told him I was busy. He took off. I've never had somebody not try to hit me up before. You know, like try to pitch me, even though I didn't want it. Let me read what you guys are saying here. Sean's right. It was more than 25 million, Sean. It was more than 25 million. Oh, wait a minute. Let me go back in my charts. You might be right. Hold on a second. Hold on. I had a brain fart. You might be right. It was... Where is it? Here. You said 25. Ollie, was it Ollie that said it? Who said 25 million? Oh, Sean. Sean said 25 million. It won't take that long. This time. Last time we had a 25 million share dilution. As soon as they announced completion, we took off. I think. You're talking about, because it was more than that, and I'm not sure if you're aware of that or not. But I'm not trying to fake a fight. But I'm just going to say that on June 1st and June 2nd is when the numbers changed. It was 50.5 million on June 1st and 1 million on June 2nd. However, Wanda sold shares to the market in the amount of 3.8 million over 4 days. And I'm not 100% certain on which exact days they are. I could come really close to telling you just by looking at the chart. Give me a second. Let's see here. 1, 2, 3, 4. Yeah, it was like basically this time frame right here. So basically between the 4 days was 5/13 through like 5/18. Wanda sold shares on 4 different events, totaling a 13.8 million shares. So just trying to set the record straight. That's all. I don't want to. I've been tracking. I've been tracking, and that concerned me quite a bit at the time, and so I was doing a lot of charting and tracking of that stuff. Let's see here. It's the beard. Cycle theory, yes. Arnold Estrada, yes. Yes and no. Such a pat answer. Yes, I believe in cycle theory, but I think what's more important is to understand why cycle theory happens. It's one thing to believe in something, it's another thing to understand why. Does that make sense to you? Hopefully that makes sense to you. Because just knowing that there's something that's happening is cool, but knowing why it's happening is more important. So, and if you what I would challenge you to go do is look up Hilbert sine wave. There's a lot of information that I think you can find on. There's actually, if you just type in Hilbert sine wave and click on the very first thing that pops up when you type that into Google, I think there's going to be some reading there that you're going to find extremely interesting. There's some patterns that are occurring over and over and over and over, and the Hilbert sine wave basically states that if you have the same pattern repeating itself during the same periods of time on different intervals, then you have a very high probability of price increasing. So go check that out. It's really kind of amazing information, and I think that will kind of maybe help you to understand why cycle theory. That's just a beginning portion of. That's maybe the next step of cycle theory. I think the third step would be going and reading True Demon's information that he's got out there about why failure to delivers are so important and what they do and why they cause our cycles to occur the way that they occur. And I think that's all really important information to look up if you're interested in why it's happening. Looking like the keep off my presser. All right, so you want to know something funny, Eric? Maybe it's not funny, but it is to me. As a door-to-door salesman, the people that you get the sales from the most are the ones that have up the signs that say "Keep off my property." Just so you know, if you don't want the door-to-door salesman knocking on your door, don't put those signs up. It's like you're advertising to get those people to come onto your property to advertise you. I got the best sales from those people. I sold one guy 4 items of what it was I was selling. I was selling coupon books. I sold him 4 coupon books after he pointed a loaded shotgun at me. and threaten my life because I was ignoring his signs. So just, I'm telling you right now, get rid of the signs. If you have no soliciting signs, get rid of them. You're only inviting in people that you don't want. Sean Alexander, the first dilution. It could be, Joe. That's actually, I, I hadn't thought of that. I like it. I really like what you said there, Joe. Could the velocity of the blow be faster because the other phases were longer and building up pressure? Wow. That's, boy, I'm glad I got this jacket on right now. Huh. Now you got me looking at data. I mean, this is the longest cycle so far, and not even by a little, by a lot. I think the longest cycle we had to before this was 34 days, and right now we're on day 44. Part of the reason why I think some of the cycles were prematurely ended, or maybe even started to begin with, were due to share dilution. And so this one might be lasting as long as it's lasting because of, let me read what you said, because the velocity of the blow, velocity. So velocity might be, you might reword that and say it's more because the cylinder's bigger, right? If you think about compression in an engine, the larger the cylinder, the longer, the bigger the well, the more compression that's needed, and the more blow there's going to be, I would assume as well. You're going to get more blow out of a bigger cylinder. So yeah, I don't know if velocity is the right word, but I understand what you're saying. More pressure. I like Joe too. Thanks for being a part of the group, Joe. Dude, I love that movie, Bill. Big Bada Boom. Oh man, The Fifth Element. I don't know what that lady's name is. Ivana. I can't say her name. I'm gonna look it up. I don't know why, but I was really attracted to her in that movie. She's not my type at all, really. But she's good looking. But I don't know. There was something about the accent and the. It was a good movie. It was just a great movie. It's probably in my top 10. Mila Jovovich. I never would have gotten that right. Sandy says, "Wow, what's going on?" Multi-pass. Oh my gosh. I love that. Multi-pass. Multi-pass. It was the straps that she wore. No, I think it was the accent. It was the accent, really. Sandy, we've got a descending parallel channel that we just broke out of, going sideways, not exactly up. I think if we kind of move to a larger time interval, maybe like a 5 minute, we might see more like a descending flagpole, possible pennant, an upside down pennant formation possibly completing, which could mean more price movement downwards. I'm kind of thinking that we might be on a synthetic price failure. If we hit 38.25, we'll know for sure. Wait a minute, you guys got me thinking about other stuff. Oh shoot, look at the borrow change, guys. 3.8. Holy moly. That's big. 3.8. Oh man, when this thing does take off, oh, that's heavy. I've said it numerous times. When we hit 3, we usually start seeing price increases. It doesn't matter if it's a return or if it's a borrow. It's always ends up being price increases. I will be heavily surprised if we don't see big upwards movement here soon. Oh, 3.8. That's high. Really, I'll be surprised. Don't do anything based off of what I'm saying, please. But this is unusually high. Borrow change being down a return of 3.8 million shares. That's pretty hefty. No, 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 please, Sandy, don't do it based off of what I'm saying. I'm just saying that typically speaking, I don't want to say it as a rule, but typically speaking, whenever I see it go over 3 million, I feel like there's more buying pressure. What we might see is they might actually try to hit this 38.25, and it might rebound off of 38.25 like really hard. Yes, yes, Monty. I covered that this morning in the beginning of the show. They did say that the finger pointing game is going on right now. They're pointing everywhere. They're pointing at Evergrande. They're pointing at apes. They're pointing at just I don't know what else they're pointing at yet. But I mean, so far they're starting to point fingers at everything they can possibly point at. Economic failures incoming due to GameStop and gamification of GameStop and AMC trading. And then the next thing you know, Evergrande. Oh, Evergrande's housing market failures coming to the United States because of them. Yeah, they're gonna point fingers everywhere, but at themselves. Okay, time. 11:46 to 1300. An hour and 15 minutes. An hour and 15 minutes from 1300 to would be 1415, which would be right about here. So if this is a pennant, I'm gonna just draw like some imaginary lines right here. I don't know which direction this is going, so let me just draw to 1415 and we'll adjust it as time moves on. So 1415, we're gonna draw a little bit of a pennant here. So this top line right here doesn't match up. It's actually extended out to 1500. So this would, to me, if this is going to be a pennant, I'm going to have to just kind of draw this. Come on. Something along the lines of that. So it should break out really close to the end of this. It may actually break out before, but what I'm saying is that a big breakout, a big movement going up or down should be around this point in time. Actually, I should just draw a box over it. I'm just going to draw a box here. I'm going to delete these. The beginning of the box is at 1412. I'm expecting the breakout to be, if this is a pennant formation, it's going to break out going down further. It should break out around 14, no later than 1415. So the box starts at 1411 and ends at 1421. So I'm kind of giving a little bit of grace period there at the end. But if we have a hard breakout going down because of this being a pennant formation driving downwards, then that would be the time frame. So it need to be in there. If it doesn't, if it continues on beyond that, then we have more of a wedge, and in which case you can't really. It's hard to say which way it'll break out. I mean, you can look at some indicators to try and figure it out, but 39.25 is our total downwards price. We are now at 17.4% price failure from the last high of 47.50. Getting really close to that blue line. One more price drop similar to this one. 40 down to 39. That could get us really close to it. Like super close. $1? Oh yeah, it could definitely get us close. I know, Kyle. I have mixed feelings on that, man. 29th of January is when I hit capital gains relief. And part of me wants this to go to that long because that would be really nice to avoid. But at the same time, though, I'm tired like everybody else is. You know, I'd love to see it squeeze earlier than later, but I am going to remain patient about it because I know, I know what's involved, and I know patience, is the work. Patience is our work that it costs us to have something great. So I'm willing to have the patience. Sandy saying, "What happened to the trampoline?" Quite honestly, Sandy, I think that if I'm gonna draw a trampoline in today, it's probably gonna have to be. I would have to draw it off the 38.25 because, quite honestly, I really think that they're driving it there. I don't want to say it, Ollie, but I don't want to say it. I was laughing. I was laughing a little bit when it went underneath 44 yesterday in the aftermarket hours. I was like, mm-hmm. But we were talking about closing price though, and you ended up being right. So I was wrong. I'm just reading what you just wrote. You guys can learn a lot by going back and looking at GME. You really can. There's a lot of really super good information out there. And if you want to learn how this how this thing is going to play out, go back and look at GME. Try to use like Tradingview and look at it at like the lowest time interval, which will probably be like 30 minutes. But go back and look at it and try to understand what happened during that period of time, because I can't stress it enough. What you could learn from that could help save you a lot of heartache in the end. Yep. Yep. You're right, Crazy Pepe. Throat gurgle. Who said it that? Who said throat gurgle? Who typed it out? Who said throat gurgle the other day when I ended the show or whatever? Somebody said that, and I was like, huh? And then I don't remember if I went back and watched it, but I actually no, I haven't gone back and watched it, but I have a feeling I probably did have a little bit of a throat gurgle at the end there. Oh, it was you, Eric? You know what? Here's something really crazy. So they say when you're married to somebody that um, you start to take on their characteristics. I never had these throat gurgles in my entire life. I met my wife, and she can't burp, but she has these throat gurgles like you hear me do now. And I don't know why it is, but hanging out with her, I've developed these throat gurgles, and I don't know where they just come from. And it's just kind of like I got burps too still though, so I got something working for me. I'm gonna be upset that I didn't go with my gut reaction of 30 to 50 million shares for the day today. I have a feeling I'm just gonna be so. If you guys go back and at the end of every single day, guys, I don't know if you're aware of this or not, but I spend like after I close down the stream, I spend like 15 minutes kind of going through and putting in timestamps on either important things that I've talked about, which hasn't been a whole lot lately, or I put in the timestamps for the technical analysis. If you go back to um, shoot, I forgot what I was saying. If you go back to something and you look at it, you can go back and you can look at different timestamps and stuff at the end of the day, just to try and make it a little bit easier on you guys. Because I know like I don't expect anybody to come in and watch like a 9-hour stream. Who's gonna do that? Like I can't even focus through like a 10-minute video from somebody. So I get it. I totally get it. But I'm gonna be sitting here looking at the charts anyway, so that's why I'm doing what I'm doing. Eric says it was funny because you were talking about whether we were able to hear you or not, and then at the end of the show, it threw a gurgle. Yep. Oh, MCon, you were asking about 37. Um, well, it didn't happen yesterday. Today I would say that there's a stronger chance. I don't recall who said, I don't know if I said no, there's no way we see 37 ever, because I always would say that synthetic price failures are in the play, right? They're always in play. Every single minute of every single trading hour, it's in play, and I'm tracking it. I'm 100% tracking it every single minute. But synthetic price failures are always a possibility. Hmm. Hmm. What's happening to volume right now? Ah, come on. Wait, okay. Yeah, it's just dwindling down here. Consolidation before price movement in either direction is, if we pull back to a 5-minute interval and look at it, there's more buying pressure than selling pressure. RSI is rising, but this is giving them an opportunity to be able to drop the price again. Excuse me, on a 30-minute interval, there's more buying pressure than selling pressure. RSI is still really, really low. On a 1-hour interval, whoa, through the roof selling pressure. RSI at 29.21. I don't think there's enough consolidation to happen here. That would warrant more downwards pressure, but I mean, it could happen. I'm kind of curious how many shares they're borrowing right now. Let me check and see. I feel like they'd have to be borrowing some shares. Nothing reported. Yeah, they did. They borrowed like 15,000 shares. It's not very much. I don't even count that. No. Duncan, if you look at the borrow change, SI goes down because they've returned shares, right? So price is going down. What's happening is you have people selling shares. As people sell shares, they're going to be able to return shares, which is why our number's so high. But as I've told you before, I'm so glad I have Al Borland's jacket on. And Bill, please don't kill me for saying this, man. Please don't kill me for saying this. And this is going to be super unpopular. Again, warning you guys, super, super, super unpopular. But what happens when we saw share dilution? We saw price increases, and the reason for that is because hedge funds have to go out there and buy the shares off the market because they need them. They need them like really, 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 really bad. So what happens when we have day traders who come in and sell their shares? They buy. They have to buy those shares. And when they start buying those shares, that's when you kind of tend to start seeing price increase. I have this really strange thesis that I worked on in my head, a tinfoil hat moment where I thought like, if all apes decided to sell 5% of their shares all on the same day, they would massively buy all those shares, and we could actually potentially cause the starting of a MOASS if we just continue to hold from there, or buy back the shares that we had as the price was moving back up. Just completely, the problem with this is that it would take a coordinated effort to do that, and that would be market manipulation, and so obviously you couldn't do that. So just throw that right out of your head right now. But what I'm trying to get at is that buying to create buying pressure, it will cause price to rise. If they don't hit a synthetic price failure and they dropped it this much, that's a failure on their part. Collusion. Yes, collusion. Collusion is what it's considered, and you can't do that. So, get it out of your head. I'm not trying to suggest it in any kind of means whatsoever, but what I am saying is that when shares are sold to the market, it does create, if there's a demand for those shares, it's going to cause buying pressure. And so, it's just kind of one of those things where if you understand how supply and demand works and there's a massive demand for shares, what happens when some of them get sold? Boom, price goes up. Huge demand, especially when it gets cut off. Once the demand gets cut off, or sorry, not the demand, but once the supply gets cut off and there's still that demand there, that price just keeps on going up higher and higher and higher because people stack. Because now you got people coming in and start buying, right? They're buying, like, oh, I want in on this. I want in on this deal, right? And so it creates a really heavy buying portion, stronger than what it was prior to the price moving up. So it's a cause and effect thing. It really is. So if price starts to head back down here, it almost looks to me like we've got an ascending parallel channel going on here. Ever so slight one. Maybe. If this is the case, then this is a bearish pattern, which when it breaks out, it'll break out going down. I'll tell you what it's really looking like, though. Oh, no, never mind. Just kidding. It's 105, guys. It's time. When is the next SI report? Let me look it up here real quick, Duncan. Next SI report is, oops, I gotta change that. Oh, it should be the 30th. No, the 15th. I'm sorry, the 15th. Unless that's a weekend, which it's not. So Monday, next Monday. All right, technical analysis. Let's see what's going on with our stock here. Vortex updating. Off exchange. Updating. That went up. And options chain updating. Off exchange currently at 55.83%. That's up about 1%. That borrow change, guys, 3.82 returned. High, super, super high. I really like that number. That's a one point. It was 2.92 an hour ago. That's of course going to decrease the estimated current short share interest of the free float, though, down to 15.94%. And taking a look at the options, on a $50 strike prices, which was where it was at earlier, highest level of volume, it was 23.8 an hour ago. It's now up to 25.1. However, we have a runner up that's coming to, might surpass it here at $45 in the next hour or so. On the put side of things, highest level of volume currently at a $40 strike price an hour ago is 13.7 thousand contracts, is now 14.7. More, it's getting closer and closer, the spread between the volume for calls and puts, but the strike price still remains at $10 spread between the two, 40 and 50. Oops, forgot to put the Fidelity over. Orders by Fidelity customers, AMC in 8th. 61% buys to 39% sales. Here comes the cavalry. 21st or 20th position was GME earlier. It's down to 19th now with 69% buys, nice, to 31% sales. Yes, I still find it funny when I say that number. Don't know why. Childish. Churlish. Moving down. Again, like I said, they've only borrowed about 10,000 shares in the last hour. I don't even count that. That's so small. I only do 100,000 or greater. Watch them start borrowing in like little amounts after I say this. That would make me laugh. In the money calls, only 11.6 thousand contracts are in the money on the calls, 85.3 thousand contracts out of the money on the puts, and 171. This number is only increasing right now, of course, because price is dropping. But if we can get a run up here, that might change. Taking a look at the market. NASDAQ is down 0.75%, Dow Jones is down 0.62%, S&P 500 is down 0.56%. There's 4,328 decliners, 2,884 advancers. We have Robinhood is down 3.05%, Amazon is up 2.6%. You can almost guess that they might be trying to pump Amazon a little bit before they can jump out of it. When I say they, I don't mean anybody in specific, just saying. A lot of hedge funds own long positions on Amazon. Cinemark is down 0.09%. Doge is down 3.33%. GME is down 5.65%, and AMC is down 11.61% for the day. Our inflow versus outflow is a 24-point spread between the two. The gap is narrowing. And let's see what our volume's like. Wait, what? $40.5. We are on pace to hit 40.5 million shares by the end of the day today. I am so hoping for an end of the day run that keeps us above that number. My prediction for the day today, which I was so close to not changing, was 40 to 60%, or sorry, 40 to 60 million. I'm upset. I'm upset with myself. Should have just gone with the numbers. I was going to say 30 to 50 and or 30 to 30 to 50 and I changed my mind last minute. Oh, that's what I was talking about timestamps earlier. If you go back and look, you'll see I had a hard time with volume. Makes me upset. I want to get that right. Sorry, it's just me. I'm just mad at myself. It's not you guys. I gotta stop listening to my gut and just go with my numbers. I don't know why I do it, but sometimes I don't know. On a 1 hour interval, we have more selling pressure than buying pressure with RSI at 32.54. On a 30-minute interval, watching me hit my chair was probably like watching Bob Ross like blow up at somebody. You guys are like, what the hell? He did go to Vietnam, guys. I didn't. I don't blow up. On a 30-minute, it's like I'm trying to. I can't get mad.
That was easy.
I feel better now. On a 30-minute interval, we have more buying pressure than selling pressure, with the RSI at 32.55, which is definitely low. And on a 5-minute interval, it had to be the vest. No, because Owl wouldn't have acted like that. On a 5-minute interval, we have more buying pressure than selling pressure, just ever so slightly, with an RSI at 50.23, which is right down the middle. Plenty of room for this thing to start spiking upwards. We are on an ascending parallel channel, which is supposed to be bearish. I would say that we're to that point right now, where if this thing doesn't just massively start turning downwards, that more than likely this is not a pennant formation. So we may not have to worry about seeing the price drop. Well, I mean, it's going to drop because it is an ascending parallel channel, but, it may not drop as hard as what we've been seeing earlier in the day today. Maybe not this kind of movements right here. I got to stop listening to my gut. It's real weird. Trading stocks and playing poker has differences. In poker, a lot of times your gut thought is kind of the thing you have to work on because um, when you see something that smells fishy, it's usually your first response is your right response. In trading, you have to look at the numbers. You really just have to look at the numbers, and you can't go off your gut. And I love playing me some poker. You know the routine, guys. If we break out of an ascending parallel channel here, going upwards, it's a bigger picture, right? There's something else going on. Let's see what we're seeing here. Who said J hooks today? Because what I'm seeing, you know, if this is an ascending parallel channel breakout, what you could have here is another cup and handle formation of the bigger one, right? The big cup and handle with the price spike up to only got to 47.50, which should have been 49. But if we're starting another cup and handle formation here from 47.50 and we're going to have a drive back up to the other side. Eric, yeah. So we'll have to see what happens. Y'all are a bunch of smart people. I'm starting to feel like I'm the slow one around here. Go watch this guy. He's hilarious. He's slow. Oh, poker's a game, stonks are life. That should be a bumper sticker. I didn't see that one. I just now read it. You said J hooks all week. Yeah. We're about to expire past the time for a pennant shape formation to produce itself in the right amount of time. So I would say that we don't have we can kind of get that out of our heads as far as this, if you look at it a 5 minute interval, it's a really crappy looking. Let me expand it here a little bit, but it's a really crappy looking flagpole right here. So the pennant's not completing because the pennant shouldn't be longer than in time than the time of the flagpole. And we are indeed, it looks like, I mean, it hasn't completely broken out of this ascending parallel channel yet, but it does look like it is going to. Bigger picture. Yep. Boom candles indeed. Boy, I should have put the trampoline right here inside of the, I apologize, Sandy. I should have put the trampoline right here. That's where it should have gone. That'd have been funny. All right, we're officially out, and there's no way. I mean, we're outside the time box here, guys. If this does not turn into a synthetic price failure and hit that lower price of 38.25, give yourself a pat on the back at the end of the day today. And the reason I say that is because if we can avoid synthetic price failures, that means huge buying pressure on our part. Huge buying pressure. It means so much buying pressure that it's not cost effective. So their algorithms end up basically switching off and saying like, yeah, no, this isn't going to work. Now, of course, you know what's going to happen. If they do let it run here, they're going to turn this, the algorithms are going to kick in and say like, let's try one more time, and it'll try kicking it back down a little bit, cause a little, and look at the price, right in the perfect zone, right? 40 to 45 bucks. You can almost guarantee, you can almost bet your bottom dollar this thing's going to turn. They're going to flip on the algos here in a second. They're already running, but they're going to kick in, and you're going to start seeing a return to try and test some of these levels again. See if they can't kind of dissuade people from being invested in this stock. Nice support right there at like 39.80. It's the gray zone, Kyle. It's the dangerous time, and you take the breath. The breath doesn't come in until we get above 45. You can take breaths again once we're above 45. That gray zone is bad juju. Well, you guys know what? It's time for me to go to break, and you know what that typically means. I think we need good old Gazer Beam Gary out here. You did say that. Okay, guys, I'm gonna go ahead and yeah, I won't forget the music, I promise. But I'm gonna switch it up though. I'm gonna find something a little different because I don't know. I felt like when I came back last time, the music was kind of like, ugh. Okay, I got music here. I'll see you guys. I'll be back at 2. We'll do our normal toast for the end of the day. gotta say, I got a little bit of chills drawing that trampoline to that music. I don't know. It was kind of inspirational music. You know what time it is, guys. It is the power hour. It's time to have a good toast to the end of the day. Wow, this really feels like it's going to pop off the top of the bottle. It's time to toast for the end of the day. Celebrate what we've gone through. Take a look back in the past, the history, what we've lived through, what we've experienced, and know that we're still standing strong. Toast to all of you guys for holding. For those of you who held today, pat yourself on the back and you made it through another day. Cheers. Got the trampoline set up down there. I probably wouldn't mind us hitting that 38.25, but I set up the trampoline to avoid it. And you know how much they hate the trampoline. So let's see what happens. I kind of want to watch it for a second here. It's doing some interesting stuff here, so let's see what happens. I'll do the technical analysis here in just a second. I'm really surprised to not see huge price movement with the borrowed change amount being a return of over 3. I would expect that there's a possibility that we see some kind of crazy action in the aftermarket hours, possibly. All right, we'll go ahead and take you guys over to the other page. I've already updated everything here. Off exchange is 57.05% going into going in. I keep wanting to call it dark pools, but it's the off exchange. Borrowed change amount 3.64. That was higher earlier. It was 3.82, so it has gone down just slightly. That's going to increase the estimated short share interest of the free float to 15.97. And looking at the options chain, highest level of volume still at, oh, it's actually dropped to 45 finally. 45 one out. So strike price of 50 is lost to the 45. We had 25.1 earlier at 45. Now we have, sorry, at 50. Now we have 26.5 at 45. On the put side of things, still at $40. It's gone from 14.7 to 15.8. Oh, I didn't move my stuff over. Orders by Fidelity customers. AMC still in 8th position. %62 buys to 38% sales, looking really strong. GME moving into 18th. I think they were 19th in the last hour. They have a 70% buy to 30% sale ratio. That looks good. Shares borrowed in the last hour. Nothing new. 19.4 thousand contracts in the money on the calls, 92.5 thousand contracts out of the money on the puts, still 163 on, or I mean, still over 100,000 on the out of the money call options. taking a look at the market, we currently have the Nasdaq at down 0.67, Dow Jones is down 0.43, S&P 500 is down 0.42. Looks like the market's starting to advance. There's 4,093 decliners to 3,121 advancers. Robinhood is down 2.73. Excuse me. Amazon is up 2.45. Cinemark is up 0.89. Doge is down 2.63. GameStop is down 5.47. AMC is down 11.2. A 19-point spread between inflow and outflow. 34 million shares having been traded so far. I am going to be super, super close. Might get lucky. Let's see, 34. Let's see, what do we got? 50 minutes left. $39 million shares traded for the day-to-day is what we're averaging pace-wise. It's going to be super, super close. My prediction was 40 to 60. Probably should have just left it at 30 to 50, but oh well. On a 1-hour interval, more buying pressure than selling pressure. RSI at, looked like it said 34 before it disappeared. $35.01. On a 30-minute interval, more buying pressure than selling pressure with an RSI of 36.13, and a 5-minute interval, more selling pressure than buying pressure. But it did cross over quite a while ago. RSI rate about average at 51.02. It was super, super close, guys. I mean, really close to signaling a pretty massive full day head and shoulders pattern. But this side over here, it would have been really nice to see us jump back up into, you know, maybe like the $41 range, because then we would have had something like that. But it's not quite completing the way that it should. So that's not a possibility. It was close. I mean, it's possible to have another cup and handle. Didn't we break out of an ascending parallel channel upwards a little while ago? If that's the case, then that may be where we're heading. Yeah, if he comes onto the channel, I'll be able to answer any questions he has. Talking to my mom here. Guys, welcome back, my mom. She's back on the show here. Also an ape. Remember, number one rule to talking to somebody about AMC is making sure that that you talk about the 3 golden rules. Always make sure you know the golden rules to trading AMC, because it's really important to make sure that you don't just talk to somebody about AMC and not make sure that they understand why it is that they're here, what it is that we're trying to accomplish, and why doing what it is that you do is so important. And I'm just saying that in general. I'm not saying it to my mom. I'm just saying in general to you guys. Ooga booga. It's so hard for me to say this when my mom's watching. Drawing in the box, leaving out just the tip. It's supposed to be funny, but it's just not funny when your mom's watching. uh, so awkward. That's laughter of awkwardness. The funny part to me is that I have to laugh at myself, and then I have to wait an excruciating like 15 to 25 seconds before you guys even come back over here and and either laugh or taunt me or whatever. And it's so tough. Hey, Masha has been smoking weed. Say what? I mean, she is in California. You never know. It's legal. Oh, you're saying I've been smoking weed. Yeah, not in this state. I'd love to talk about Bob. So it looks like we got a little bit of a wedge pattern formation here. Really kind of difficult for me to kind of, well, hold on a second now. Hold on. Hold the phone. Hold the phone. What is this? Oh, it's almost. Yeah, I'm going with that. I'm going with I'm sticking with what I had. Um, Hard to say which way it's going to break out here. Let me do a little trend channel. Oh, you know what I can say about Bob? Bob is an author. That's what I can say about Coach Bob. Bob is an author, and he wrote a book one time and he used my name in the book. So my name is in a book somewhere. I'm not going to say where, but he used my name in a book, which was kind of cool. Based on this trend analysis, normally I draw it out for the whole period, but I kind of only want to draw it out for just a section where the trend is kind of like in agreement. Because I don't think that's fair. And based on what I'm seeing right here, what do we have? It looks to me like rising price along with I gotta stare way down at the bottom of my screen here. Beer's in the way. Rising price with rising volume, which is bullish. Wait, no, that's bearish. Rising price and why am I forgetting this? Yeah, that's bullish. That is bullish. I got it right. So I have conflicting data. The trend analysis on this, I'm not really sure where to draw it from. If I draw it from here, the trend analysis or the trend channel points towards the top side of the wedge. If I draw the trend analysis all the way back here, it's pointing at the bottom side. If I do it this way, it would, it's suggesting that the price should break out going up. If I do it this way, it should suggest that it's going to break out going down. So I'm not really sure what I should do at this point for this. But I want to say that volume's increasing and price is increasing currently. So we might see a breakout going up. This is questionable. This one's a 50-50. This truly is a wedge pattern, and it's really difficult for me to tell. Let me see what you guys are writing here. Your 5-minute chart says we're going down. Yeah, the 5-minute interval does definitely say that we're going down. In fact, it's about ready to converge right now. But RSI is at just under 50. So if we do go down, because of the 30-minute and the 1 hour, it wouldn't be down too far. Probably not enough to break out of this wedge. Guessing. Yeah, my 30-minute and my 1 hour are saying up, my 5 minutes saying down. So I would say up. It's hard to say though. Bull flag on the 15-minute. I don't have 15 minutes, I don't think. Yes, I do. I don't see enough data. Let me just check something out. I don't see enough data to really support any specific direction. It's hard to say. Let me check one other thing here. I haven't checked this all day today. I mean, the volatility, excuse me, the volatility on this isn't even really helping at all either. I mean, like you would think that if volatility started increasing a whole bunch, it would, I would tend to think that it would be the direction that once you see volatility start increasing, So when you see the upper and lower Bollinger Bands start separating apart from each other, whichever direction the price is starting to go in that at that point in time it would be the way that I would suggest it's going to go. And you just notice that the Bollinger Band actually just started decreasing, which means there's less volatility, which means that more consolidation. Um, hmm. Like for example, like right here. Do you see how like at this point in time you can see volatility choking, right? It's really a choking point, right? And as soon as it starts opening up, you can see the downwards pressure and movement as it starts to open up here, and so that's the trend channel that it's going to start taking. Another good point would be right here where it starts to choke or pinch right here, starts to widen up and price is falling, but then it just kind of returns to. It actually had some unnatural movement right out here, which is probably why it returned to the exponential moving average. So just trying to get a feel for I mean, man, volatility is really pinching down on this. Super, super tight. Ooh. What is going on with the order book? Let me watch this for just a second, guys. I gotta look what's going on with the order book here. I'm looking specifically for small values to pop up on the bid side, like single digit values. Hmm. And I'm not seeing it. And you can tell the order book is really tight. 77, 76, 75, 74, 73, 72, 70. The orders are tight. There's no gaps to fill in here. There's one right here between 67 and 68, but for the most part, they're not filling gaps with small orders. They can't because the gaps are all filled. So it looks like we have strength. We're at point C. Bitcoin's pumping right now. Okay. Point C of the Elliott wave. For those of you who are not familiar with the Elliott wave, let me pull it up. It's probably the best one. So for those of you who are not familiar with Elliott wave, okay, see, look, volatility starting to pick up. Price is heading down, so we might break out of this going downwards. Here's the Elliott wave. Which does not show the correction after the corrective move. I forget what that's called. Let me try and find a better image. There's a better image here somewhere. Yeah, this might be a good one right here. This is pretty basic. Let me do this one. So point C is what's being referenced right here. So upwards movement after point C it signals a turning point. The one thing that I want to say about our price movement for the day today is that I really feel like we've had a let me just kind of back out just a tad bit here. 30 minute probably. Let's do 1 hour. So what I want to kind of point out to you guys is that the date that I have listed for being in the bang phase started on 10/14. 10/14 is right here. This is the point right here. Price is supposed to remain relatively the same while volume decreases. And you can see down below that there's volume decreasing over time, but there has been a few spikes. And I think that what happened here is that price went too high. There was a correction for price. Price again went too high again. There's a correction for the price. And now we're relatively close to the same price. So I think we kind of tend to see a little bit of volume reduction at this point over the next couple days. Volume reduction with price relatively remaining close to the same. If we zoom out even further, I would imagine that we probably have a multiple test point at around that 47.50. You probably have to pull out to the day to see it. My guess is, yeah, it looks like we've got multiple test points here. You can see if I just hold the line just above that high point right there. $46 is what we're gonna need to break. We gotta break past that point. Okay, volatility is starting to pick up. You can definitely see it's driving towards the bottom side. We've had some very strange events happen at about 16:30 lately. Watch for that time frame today, guys. When we get to 16:30 today, watch for some strange activity to happen. I'm not going to post it on Twitter like I did last time because people are like, what happened? And it's like, well, we did have some volatility that occurred right around 16:30, but, you know, it fizzled out really quickly. So watch for 16:30. There's something that's going on around 16:30, and I'm not sure if that's when they decide to close or settle some of the positions. But watch for 16:30 to be Eastern Standard Time to be some kind of possible price action. I almost kind of want to move my box back a little bit so that it encompasses just that section, but Kyle. No, I'm not saying that. But I like your enthusiasm. And I'm glad you're not lurking anymore. I'm glad that you feel comfortable that you can talk. This is a really safe place. You know, I'm I want everybody to feel like they can say their opinions, irregardless of whether it's popular or not popular. 200. I don't even know, guys. If I'm streaming, if I'm ever streaming when we hit like, I don't know, $1,000, I might pass out. I'm just gonna lean my chair back and I'm just gonna go. I'm just gonna pass out of my. Oh, you guys can't see me. Damn it. Okay, there we go. I'm just gonna be all like, when we hit $1,000, and then I'll come to and I'll be like, pass out again. You know what I'm saying? Like, I don't know. I have a feeling that going up is going to be a little more challenging than just holding during these periods of times. Itching my back on my chair here. I got itch spot. Oh, wait, wait, wait. I got my back scratcher. Ah, yeah, that feels good. I agree, Sean. I agree. Yes, Ollie, I can. I will do that. I will. You can you can. I'll give you my personal phone number. I don't know if I should be responsible or be a part of that. Can I get in trouble? I don't know. I did that. I've already done that, Ollie. I went through that experience, and I honestly thought it was going to be a good experience. I thought it was going to be rewarding. But the manager that I was working for at the time, um, he really kind of ruined the moment. My direct supervisor was really cool about the whole thing, and was really excited for me and happy for me that you know that I had a potential opportunity that was life changing. Really supportive, but the manager of the department of the shift, um, not so much. I mean, just really laid into me hard, and not just me, John. John, who was on the show yesterday, can confirm he was there. He was there in the meeting, and I don't know. It was a bitter. He made it a very bittersweet moment, and I think it depends on what kind of boss you have. You know, if you've got a boss that doesn't care about you as a person, the reaction that you get is probably not going to be what you want, or maybe it's exactly what you want. I don't know, but I don't know. For me, I wanted to have them say like, "Hey, man, that's awesome. Congratulations. What is it you know like? What's going on? You know what I'm saying?" If your boss isn't a bad guy, you probably don't want to live stream something like that. You know what I'm saying? Like, if he's a good guy, maybe you're not going to like the response you get out of him. Maybe you'll love the experience, but you don't want to live stream something like that if you don't know and you like the person. Absolutely, Sean. I can zoom out. I'm not sure what it is you want to see. I'm not sure if you want to see a different time interval. I'm currently on a 1 minute time interval. Yishin, I don't know. Do we see the boom candle to 45? I don't know. I tend to think that we're going to have some consolidation over the next couple days. Consolidation with maybe a little bit of volume decreasing, and then I think just one day we're going to wake up and volume's just going to be through the roof. You know what I'm saying? Like, I think one morning we're all going to wake up to maybe like 400,000 or 500,000 shares being traded by the time I start my stream, and we're just going to be like, yep, guess what? Today's the blow. You know, it's going to be really super obvious. I don't know if I go that far. Michael Dieter, welcome back. What was your best guess on what happened since 4 p.m. yesterday? Day trading? Michael, day trading. That's what happened. I'm almost 90% certain that that's the case. Tell you what, Michael, I don't know if you have the access to do this, but well, I already covered it earlier in the show today. But if you pull up a 1 hour Ishimoto cloud on that and look at it on Friday, there was a perfect buy-in point on Friday. Both the 1 hour and the 4 hour showed buy-in points for day traders, and then the exit point was kind of like last night, basically. So that's what happened. Yeah, it's going to happen, guys. You can't get rid of day traders. You can't. It's impossible. It's part of the market, right? I mean, there's guys out there that chase the money. It's going to happen. And here's the thing. If you sit here and try to tell me that day traders aren't going to be are not going to be the thing that kicks us off to astronomical numbers, I'll tell you you're wrong. Flat out wrong. 100% day traders are going to kick this off because they're going to see it coming. And they're going to come in here and they're going to be the ones who starts the FOMO. So you guys don't have to agree with me, and that's fine. But I can guarantee you for a fact that when FOMO starts to hit, it's because the day traders already hit, and they'll be leaving. They'll be leaving. You know, at some point they'll hit their numbers and they'll exit, but they'll miss out on the MOASS. That's the problem. There's no way that they'll be there for the MOASS because the numbers, they either won't be able to trade it fast enough, or the limitations on time will prevent them from being able to be in the stock during the biggest parts of the squeeze. So mark my words, I'm telling you right now that day traders it's part of the process. It's part of the process, it's part of the market. It's going to happen. Michael, you said low volume through. Oh, low volume though. That's what you don't understand. It doesn't matter. Look at the Ishimoto. All right, I'll pull it up for you again. I got time. I'm gonna go to the 1 hour. Don't look at volume. Those day traders they don't care about volume. They're looking at these numbers right here. I got a lot of lines on this page, so you're gonna have to forgive me a little bit because I don't feel like deleting them all and then recreating them. So I'm gonna try and zoom in here the best that I can on this so that you can see what it is that I'm talking about. But if you go to last Friday, the very first indicator, this is the cloud. This is Ishimoto cloud right here. Day trader would never trade inside the cloud. Rule number one, never trade inside the cloud. Well, you got price on Friday on a 1 hour trend, breaking outside the cloud. It's above the conversion line, which is this gold line right here. And then down below that's the baseline. The baseline is underneath the conversion. They actually crossed over right here in the pre-market of Friday. So you have price rising. Here's your entry point right here for your day traders on Friday. It would have been around 14:30, somewhere around that time frame. This purple line right here is what's called a lagging line. The lagging line is used as an indicator to exit your position. As price moves up this line here, right? It's moving up. You see the conversion line moving into the price into the upwards movement of price into the pre-market hours of Monday. That would have been their first indicator to sell. But price is still moving up, and they're like, nah, I'm not selling quite yet. So price keeps moving up, and sure enough, price moves above the conversion. So they would have made the right call. Then all of a sudden, on Monday afternoon, price starts to hit the conversion for a second time. And then it hits the base. That's your time as a day trader to get the F out, right? It's time. It's time to get out of there. It's if you wait until this conversion line crosses the baseline, it's too late. You're probably losing a lot of potential earnings. The other indicator would have been this lagging line, but you can see that the lagging line didn't actually cross over into the price range until maybe about 6 or 7 periods ago, which means that the indicator wouldn't have happened until like midday today. So that indicator never actually flagged. So you have your first time right here and your second time. Now, if you go to the 4-hour, go to the 4-hour chart and look at the same thing. They look at both these two charts, 4-hour and 1-hour charts, huge. They're huge. Here you have Friday again, 4-hour chart. Out of the cloud, but below the this is terrible looking. I'm trying to zoom in on it, sorry. Below the conversion, but conversion is above base. You're outside the cloud, and right here on Friday, right about here, maybe here, it's above the conversion and above the base and outside the cloud. Buy-in. 2 different indicators on the same day indicating a buy-in. So you have day traders buying in, and here's your first point where it touches the conversion. They're like, oh, flag to get out. And here's your second point touching the conversion. Time to get out of here. Start seeing red. They probably start selling. Right? And that's where we're at. Man, I feel like I'm preaching. You guys know what's going on. I mean, just think deep down inside. You know what's happening. I know you do. I don't think you even need me to tell you this. You just don't want to admit it to yourselves. And I understand why, because nobody wants to believe that people are selling AMC. Nobody wants to say that. There's hardly any YouTuber. Everybody's always saying everybody's holding. Well, not everybody's holding. There's not everybody, right? It's a false statement. There's people who are buying and there's people who are selling, and it's how the market works. So that's what happened to us. Pretty certain of it. Absolutely, man. That's what I'm here for. I'm here to help you guys understand what's going on. I'm here to help myself understand what's going on. I don't want to admit it myself. I don't want to admit that there's people that are selling. It's painful to say, but it's the truth. It's not apes. It's not true buy and hold apes. So don't worry yourself with the price, Michael. Don't worry yourself with the price. Worry yourself about the volume. If you'd come in here and said, and actually you kind of did, you did say, what the heck happened to volume? And I would actually sit here and I would tell you, we're in the bang phase. If you don't know what my suck, squeeze, bang, blow is, where I relate our cycle that we're in right now to a 4-stroke engine, highly recommend checking that out. It's on my Reddit. If you look me up on Reddit, you can see my posts on it. It's a really good read. It's great for sitting down and on the toilet and reading it. Yeah, exactly what Ali just said. Price is fake. It really is fake, and it's all in the volume. But we're in this really interesting period of time right now where we have volume consolidation, not volume reduction. Sorry, we have price consolidation with volume reduction, and the next thing that's going to happen is exhaust, the blow, where everything is exhausted out and it just completely takes off in price. Oh, somebody just followed me on Reddit. Also, the float is not 513. It's actually, Sean, I don't know if you know this or not, but it's 511. free float is 511.47. The shares, the total amount of shares is 513.33. Yeah, I don't know if you care or not. Oskin, welcome back. Good to see you again. Most of the selling is short sellers, or could be Citadel cashing out on the stocks they purchased along. Kyle saying our buy and hold mentalities are going to pay off a lot more than a day trading mentality wherein the squeeze truly comes into play 100%. That is absolutely true. A day trader is just trying to make small profits on swings. And it can be profitable. It can be risky. But I would probably tend to say that it's, I don't know. Actually, I don't want to go there. It can be very profitable. If you know what you're doing, it can be very, very profitable. But I would suggest that you need some years under your belt in trading to understand what it is that you're doing. Like you shouldn't just jump out into the racehorse trough or whatever the heck they call that starting line as a brand new trader, expecting that you're going to make money with the big boys, because it doesn't work like that. There's big lessons to learn, expensive lessons. That's why I think that there's a natural progression for a lot of people to kind of start out when they first trade. I think a lot of people do penny stocks. I think it's a natural progression because you just don't have the money to play with the big players. And so you end up learning and making a lot of mistakes on the penny stocks, and it's almost like it's a proving ground. At some point, you realize, though, that you're not going to make any money there. And so you start moving into the big leagues. And I'm not saying that you can't make money playing penny stocks. Don't get me wrong. Look at PayPal. Their average volume is 8 million, and today they are selling off with 59 million, 7.5 times the volume. Our sell-off is happening with 36 million volume, which is, yeah, hardly anything. We are both dropping 11 to 12%. Let's look at that. That might be interesting to just kind of see. I don't know PayPal's code off the top of my head, so I'm going to look it up. PYPL, I mean, it should have been pretty easy to figure out, but I didn't know it. Holy smokes. That's interesting. Let's do that again. Come on. Some similarities there. I just wanted to kind of see, I just want to see them side by side. Let me go back to it though. So this is what he's talking about. Average 3-month volume is 8.68. However, yet their volume today is 59.81. And this is a demonstration of what I wanted to tell you guys. You know, I always tell you, like, you know, if price is increasing, and you have, a massive amount of volume compared to your 3-month average, then you should start looking to see why that is. Now, in this particular instance, what you have is you have price decreasing with a huge amount of volume. That's a sell-off. I mean, it really does, it doesn't take rocket science to figure that one out when you have huge amounts of volume compared to your 3-month average, but their free float is 1.17 billion. That's insane. Holy crap, that is insane. Hold on a second here. I got to do that math. Are you serious? 8.68 divided by, oh. Dude, that's near Amazon level of am I doing the math right? It should be 117. No, they actually are being shorted. It's actually pretty high. They're being shorted by actually probably a little bit more than GameStop is right now. I haven't ran GameStop's numbers in a hot minute, but they have a 7.4% ratio of their 3-month free float being traded. That doesn't seem right. I feel like my math is off. 8.68. Hold on a second. I got to go back to ours. Oh, it was 7%. I was right. Okay, yeah. GameStop. Oh, I keep hitting the wrong dang button. 2.84. Yeah, GameStop's only being they have a much smaller percentage of their free float traded daily. Interesting. Let me just look at it one more time. Yeah, that's right. They're being shorted, but it's not real heavily. Maybe half as heavy as AMC. Oh shoot! I just talked myself right into the end there. Price action is going to remain unsolved during normal hours. I agree. Like I said, guys, watch for 18:30. Or sorry, I said 18:30. I meant 16:30 Eastern Standard Time. So 4:30. Watch for that. That's going to be what is that? An hour and a half? Oh no, 16. No, half hour. Watch it. Just watch and see what happens. Sometimes we see fireworks right around that time. So, as usual, though, guys, you know the routine. It's been a wonderful day trading with you, watching the stock market move. You know, go eat, sleep, drink, spend time with your families, spend time with your friends. But above all else, Don't have a good day. Have a great day.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start.
Go for auto sequence start.
And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward leg now and advance.
Okay, you sound good.
Discovery Houston, negative return.
Copy, negative return.
When you were here before, couldn't look you in the eye. You're just like an angel. Your skin makes me cry. You float like a feather in a beautiful world. I wish I was special. You're so fucking special. But I'm a creep. I'm a weirdo. wish I was special, but I'm a creep. I'm a widow. What the hell am I doing here? I don't belong here. Whatever makes you happy, whatever you want. You're so fucking special. I wish I was special, but I'm a creep. I'm a